inflation data on deck. Mike Wilson of Morgan Stanley put it best this morning. For him, for the team, this story's over.
If you take a look at where break-even futures are, guess what? It's over there too. Bond market saying that it's over. Roughly 48% of investors surveyed by 22V Research said that it was going to be a mixed or negligible market reaction to what we're going to be getting in about 30 minutes time. And maybe rightly so, considering the fact that the year-over-year comps have left us with a very low rate of change of inflation. Key question, what would be the biggest surprise for market? Upside surprise or a downside one?
Good question. Key caveat. Now, this is a key caveat. Mike Wilson talked about the price change story being over, but the price level story wasn't. And that's why you see this so still, politically charged, on the campaign trail and in the debate as well yesterday evening.
Absolutely. Trump immediately went into the price change level. That goods basically are up average 20% since Biden took office, since we've seen that acceleration of inflation. He talked about groceries, things like bacon. And this remains top of mind for American voters, which is why it is so interesting that he wasn't able to prosecute the case on the sitting incumbent on the stage with him. He waited to the very end of the debate to say, what have you been doing about it? You had 3.5 years. And even moments where he could have went into other things that poll very well for him, like immigration. He said, no, first, before immigration, first, I actually want to talk and correct everyone about the size of my rallies. That is really the deficit he had on that stage. Wasn't able to lean into the things that benefit him.
Speaking of debates, big debate here in New York City as well. Wall Street having a big debate at the Barclays Global Financial Services Conference. Do we have a problem with interest rates coming down, or do we have a problem with credit quality? Ally Financial, we keep going back to it. Problems in the auto loan book for consumers. Big issues.
People talking about how this is just a consumer issue. We heard that from Thomas Show as well as others, not necessarily a corporate issue. But this, to me, it's high inflation to the point that you were just saying, the high absolute level, eating into consumers' ability to repay their loans, cost of living, and now more recently, a weakening employment picture. This is the reason why people care more about the labor market than inflation, because we know prices are a lot higher than they were in 2020. What we don't know is, are people being hired and getting the price increases in their income salary that they were before to keep up with that? And I think that is really the question that Ally Financial was talking about.
Futures recovering just a little bit. We're down 1/10% or 2 on the S&P 500. In the bond market, the rally continues for a 7th consecutive day on a 10-year Treasury yield to lower by 2 basis points. The 10-year 361.80. Coming up on the program, Scott Cronin of Citi on why tariff and tax policy are the most relevant to the equity market. David Kelly of JP Morgan on why a 50 basis point rate cut could do more harm than good. And Steve Rasciuto of Mizuho reacting to CPI data. We begin with the top story. Stocks mixed following last night's debate and ahead of today's CPI report. Scott Cronin of Citi writing the following. We argue that tariff and tax policies have the most relevant impact to U.S. equity fundamentals. Although it is premature to analyze with high confidence, our conclusion is that higher corporate taxes pose a bigger risk to earnings than do tariffs. Scott joins us now for more. So Scott, a range of scenarios, and you have to attach a range of probabilities to each individual scenario. What's the base case now for you and the team, and what are you advocating for when you speak to clients?
Well, the base case for us is still a very tight race to call, which I think is one of the outcomes of last night. So without weighing too far into the actual debate, let's just kind of get to, from our perspective, what really matters from an equity market perspective, and that is what impacts or influences fundamentals going forward. And from our perch, nothing really has changed. You've got two different approaches to how to navigate the economic condition from here. With Trump, as we've seen in his first term through, tariffs become an important solution for many issues. But with tariffs, what we think you get is something that conjures up the supply chain disruptions of the COVID timeframe, whereby you see the cost of goods sold element for many companies, the ability to pass through prices or price increases resulting from tariffs for others, that begins to muddle the fundamental picture. On the other side, when you start talking about raising the corporate tax rate from 21 up to proposed 28% right now, what does that do? And very simple back of the envelope math, if you look at consensus earnings expectations out to 26, which is when we presume that such policies would actually be implemented, right now consensus would say, which is very early, 12% growth in 26. At a 28% corporate tax rate, that's closer to 5%. So in both cases, our focus is on the influence and read through the fundamentals And if for both candidates, our initial take, ongoing take actually, is that they're both at the margin equity negative.
Scott, we've got no idea how campaign promises translate into legislative reality, but we do have to explore some scenarios nevertheless. You explored one. It's much cleaner to sort of analyze what Harris is suggesting. You go from 21 to 28, it's a clean lift in the tax rate. What Trump is proposing is less cleaner, 21 to 15 with conditions attached to it about where you produce. Scott, how are you investigating that one? How do you analyze any of that?
Well, I think we probably in our thinking, we give the chances of even lowering corporate tax rates pretty low. And why is that? We're still looking at a backdrop here where the deficit set situation heading into 25 and beyond is where it's projected to continue to increase, okay? And so funding the deficit is going to be an ongoing issue. When you start talking about extending the Trump era tax cuts, that's an immediate negative to the deficit because essentially current CBO projections are based on the presumption that the Trump tax cuts expire. So the starting point for all of this discussion is kind of circular. And so where we come out on this is that we're going to have this ongoing issue of funding the spending that both candidates seem fairly compelled to continue on. You're not seeing much discussion on how to control spending from this point. Not many votes in that at this point. But what it does do for us is kind of keep the ongoing focus on, okay, we have to at some point address the revenue gap that comes with funding the deficit in relation to your approaches, whether it's approaching higher corporate tax rates, lower corporate tax rates, or finding other means via the tariff approach. All told, you're right. It is a bit of a jumble, and it does put a lot of pressure on whether or not you control Congress, i.e. via both houses. The base case is that we're still looking at most likely a split Congress in the case of President Harris. A little bit less clear in the case of a President Trump. So still a lot of moving parts to navigate here. So at the end of the day, what we do is we put the election circumstance out there as a tail risk for U.S. equities. In the meantime, we've got other issues. We've got soft landing or not, which is an ongoing debate with many clients. And at the same time, you do have this AI fundamental tailwind supporting many other aspects. So again, part of this is putting the election outcome in context versus other forces at work in the equity markets right now.
Let's talk about the force that's coming out in about 21 minutes time, which is CPI, which at one point was a very big data point, now is not, at least for markets that have discounted the threat of an increasing rate of change of inflation, at least in the near term. How much do you see the biggest potential threat to markets as an upside surprise versus a downside surprise?
It's a really good question, and this is a bit of be careful what you wish for, right? Because our view, generally speaking, has been that, the inflation circumstance has many root causes, but among those was the navigation of the COVID circumstance where you essentially shut down the global economy and then took the time to restart it. I think if we've been surprised to the negative, it's that period of time has been longer than might have been expected 3 years ago. But in any event, we are here now and mostly have round-tripped the inflation metrics. What you have to remember, though, is that inflation, for all of its issues, has probably been an equity positive from a fundamental perspective. What you've gotten with higher inflation was a tailwind for revenues, which has played through down to earnings. So when we start talking about the impact of lower inflation, and with it the opportunity for the Fed to begin to pivot off of its hawkish narrative, what comes with that is a transition period where we're going to be a little bit more focused on some of the tailwinds that we thought we had for equities over the past 2 years, maybe migrating down a different path, right? So at the end of the day, there's a dual-pronged approach to how to think about inflation. I think we all structurally want to see it come down to a more contained level. But at the same time, we do have to appreciate that from a fundamental influence, it's going to be a mixed picture, we think, for the next several quarters.
You make a really fascinating point that essentially the increase in the rate of inflation actually was a real boon for a lot of equities and equity valuations in terms of the prices that were being put on different things. I'm just wondering, what is the break-even rate? And I'm not talking about expected inflation in the future, but of just the actual inflation rate for it to be neither difficult for companies when it comes to pricing power or difficult for them when it comes to just some of the margin pressure?
That's also a really good question, and it's an ongoing debate internally and I think externally. You know, what's the new or expected neutral rate for the Fed, and how does that influence broader activities? The way we've thought about it and are modeling it out, to be quite honest, is that we're quite comfortable with an inflation rate in the 2 to 3% range. What that does, we think, is it negates some of the issue that we had during that post GFC timeframe when the Fed was trying to engineer inflation. We've sort of forgotten about that period of time because of COVID and the post-COVID circumstance. So, you know, trying to engineer inflation has its own issues. Trying to contain it, yet another set of issues. So we're quite comfortable in a 2 to 3% inflation range. We think that gives policymakers room. We think it gives companies fundamental room. But how that actually translates into a bond market response is kind of tricky. And that's another topic in the markets. What are the bonds? What are bonds pricing right now versus what equities? And what I would say is that kind of comes back to what we would argue is that in equity land, we're mostly pricing in a soft landing circumstance right now. You see that in earnings expectations. You see that in valuations being paid. We see it in our implied growth circumstance. So all told, what I would say is that we're going to be entering a transition period here, you know, and then we have elections out there, as I mentioned, as a tangential issue. All of this sets up, we think, for a bit more volatility over the short to intermediate term. But ultimately, as we get further into a Fed easing regime, as they can begin to respond to more signs that inflation is, quote, contained, we think ultimately that's a constructive backdrop for U.S. equities.
Scott, if we could just come back to the election and the composition of Congress next year, are corporations taking solace in the fact that the Senate is likely going to be a Republican, so there cannot be the blue sweep that potentially would be the worst case scenario for corporate earnings?
It's hard to say with one sweeping view on that, but what I would say is that because of the, let's say, the lack of conviction on whether you have a sweep for either candidate and the likelihood of sort of a split Congress, I think what that's doing is it keeping many investors at bay in terms of how you actually try to discount election influences, right? So we're still in an uncertain time, so we get lots of discussions on the election outcomes and potential impacts. But I think it's very, very difficult for investors and probably for corporates to actually establish a traditional strategy premised on an election outcome at this point. There are so many moving parts that are going to need to unfold here that you're out there, you're analyzing it, you're preparing for it. But in the meantime, you're running your business or your fund with what you know and what you see in front of you, in front of us. And that's, as I described, is really where we are with the economic condition, getting to a Fed pivot. And then in the meantime, how do you really want to manage against the AI tailwinds that seem to be unfolding at the same time?
Hey, Scott, well said. Scott Cronin there of Citi on the latest, reflecting on the debate of last night and looking ahead to CPI at 8:30. In many ways, for once, bond investors have it easier, and this is why. It's not about what will happen, it's about what won't if Harris wins. If you get a Harris presidency, you don't get the extension of the tax cuts. That is bond positive, which is why so many people are saying that out loud. What happens on the other side, I've got no idea. If you get a blue sweep, if you present someone with a blank check, are you telling me they're not going to write big numbers on it if you get a blue sweep?
That's what a lot of people are assuming. But if they write big numbers on it, is that going to be a positive or a negative? And is it sort of flip the tables where it's going to be negative for bonds and positive for stocks? This is the reason why people don't want to get too cute with it, because good luck.
I don't think you have to get too cute. I think it's pretty straightforward. If you're going to take the corporate tax rate from 21 to 28%, and you have the ability to do that, stocks sell off initially. But if you start coming out by talking about fancy big programs, spending, lots of spending, then things change and things can change quickly. This is why we've got no idea on the other side, on the equity side. On the bond side, initially, divided government, Harris in control, no extension of tax cuts. Bonds are bid, they are this morning.
Yeah, increase in revenue, and most of the projections out there on Wall Street would say that the actual deficit would be smaller under her marginally than a Trump administration. That said, longer term starts to look very different depending on the composition, as we've been talking about.
Things can change on the morning, like literally overnight, depending on the results in the acceptance speech. We saw that in 2016. Yields are lower this morning by 2 or 3 basis points across the curve. Let's get you an update on stories elsewhere with your Bloomberg brief. Here's Danny Berger. Hey, Danny.
Hey, John. Spanish Prime Minister Pedro Sanchez today broke with Europe, calling on the EU to rethink the additional tariffs on Chinese EVs. Sanchez is currently traveling in China and said at a press conference that it's important to find a compromise and added, we don't need another war, in this case, a trade war. The upcoming EU tariffs on Chinese-made EVs could theoretically be blocked if countries representing 65% of the population vote against the measure. Apollo is working on its first ETF. It's teaming up with State Street on an offering that will include private credit investments. The ETF still needs regulatory approval. State Street joins firms like BlackRock and Invesco in looking to make private assets more accessible to individual investors. And the battle between Disney and DirecTV is trudging on. Disney, which owns the ABC network, offered to reconnect its feed for DirecTV customers to watch last night's presidential TV debate. DirecTV countered, saying it would agree only if the channels would stay live through next Tuesday so customers could also watch the Emmys and Monday Night Football. That offer was rejected. That's your brief, John.
Danny, thank you. Appreciate it. More from Danny again later this hour in about 30 minutes' time. Up next on the program, the morning calls, plus Bloomberg's Shonali Basak joins us for an update on the financials. But first, we're marking 23 years after the terror attacks of 2001. Friends and family gathering at Ground Zero to remember their loved ones. Also expected to attend this morning's memorial, the President, Joe Biden, and Vice President Kamala Harris, together with the former President, Donald Trump. At 8:46, we will have the first of 6 moments of silence, beginning when the first plane crashed into the North Tower of the World Trade Center.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
And 10 minutes away from the cash open, the opening bout just around the corner. Futures pulling back 0.1%. The rally continues in the bond market. 7 consecutive days of yields falling. The 10-year down another 3 basis points, 361.42 on a 10-year. I said this a little bit earlier, Lisa. We've not had a single day in the month of September where yields have closed higher on a 10-year.
There's basically been this 1-2 punch of both the data being okay, but a little bit weaker, and a Fed that's basically saying we're going to cut. The question now is just how much.
That's the latest on the bond market. Let's turn now to some morning calls for you. First up, Jefferies upgrading Williams-Sonoma to buy from hold and raising its price target to 156 from 148. The analyst saying the retailer is outperforming industry growth while cutting back on promotions. That stock is up by 0.4%. Your second call from Bank of America, cutting its price target on Ally Financial to 37 from 46 and keeping a buy rating on the shares. The analyst saying yesterday's sell-off was overdone. We're bouncing back by 0.7%. And your third and final call from the team at Goldman, cutting Morgan Stanley to neutral from buy and lowering its price target to 105. The analyst saying the bank has less room for recovery than its peers in its investment banking division. We're trading softer there, lower by 1.3%. Around the table, Bloomberg's Sonali Basak. Sonali, good morning to you.
Good morning.
What a few days at the Barclays Global Financial Services Conference. Suddenly it got very gloomy and very quickly.
Very gloomy, and it's interesting when you have the bank executives telling analysts here that they're being too rosy about things. Calm down, we've already made our records. Don't expect records anymore. That net interest income guidance from JP Morgan really set off a wave here. At one point, JP Morgan, of course, yesterday trading at the worst level since the middle of 2020. Did it deserve that after saying what it did? At the end of the day, the bigger problem is not just net interest income. You're seeing this over for the Morgan Stanley call from Goldman as well, that even investment banking won't be evenly distributed. So the riches being won across the rest of Wall Street are starting to become compromised. Goldman Sachs with that trading estimate going down 10%. Goldman is the king of the castle here. So what's going on with these Wall Street businesses?
There's one thing with net interest income. With investment banking revenues, everyone can cry a whole lot over that in terms of the bonus pool. There's another story when it comes to Ally Financial and this idea of a consumer that cannot pay its bills. And that is really where people's fear really lied. How much did you see that as a theme or versus an outlier with Ally?
I would say I'm more surprised it hasn't been a theme already. Because if you think about it, not only has the consumer been weakening over consecutive quarters, you only have another month until the next earnings cycle as well. So this is going to play catch up pretty quickly here. What is it going to take in terms of rate cuts, Lisa, to get people to borrow once again? The average APR on a credit card in America is almost 25%. And mortgages above 6% are not going to move people out of homes that have mortgages at sub 4%. And so you have consumers who are maxed out on credit card debt. You and I talk about this all the time. If you're at Bank of America or even at JP Morgan, your FICO scores are much higher than a lot of these other firms like Ally Financial. You have 750 to almost 800 for many types of credit products over at Bank of America. So the lower you are in that FICO spectrum, very naturally you'll be more stretched than otherwise, even if you see inflation coming down and rates coming down as well.
About 7 minutes until we get CPI, and we've been asking this question for the better part of about 3 years now, which is when rates go lower, is that good or bad for banks? And we got kind of a motley answer yesterday. What's the read-through of the people you speak to?
Well, this is pretty fascinating. One bank I would watch is actually Bank of America, because as rates go lower, their rollover in their hold-to-maturity portfolio here, the thing that's burned them for the last 2 years, is getting better by the tens of billions of dollars per quarter. And so that's the one bank where you saw the pain less than others in yesterday's trade. But the big ones, remember, JP Morgan, when they're making that net interest income, it's that credit card business. We're talking about the consumer here. And if you're a corporation, you're not going to have the same story because people have been chomping on debt like nothing's wrong. And so the levered loan market's open, the high yield market's open, the investment grade market's open, but the market is not as open for the consumer who wants to get a loan.
There's been a ton of supply. The answer, I guess, is it depends who you are. And we heard the same thing from Gerard Cassidy of RBC earlier this morning.
And it depends where you make your loans, and it depends on your deposit beta, and it depends on this, that, and the other, which is the reason why financials have been a very complicated trade.
Sonali, thank you. Look out for Sonali Basak alongside Matt and Katie at 9 a.m. Eastern Time, leading some of the coverage on the financials. Equities right now down 0.1% on the S&P 500. CPI dropping in about 5 minutes' time. Mike McKee around the table with us. Mike, just a brief preview of what we can expect from inflation data in just a moment.
Well, I said this before, economists are pretty good at forecasting CPI, PPI, et cetera, so they're looking for a 0.2% gain in both the headline and the core. That would push on a base effects basis the headline number down for the year, and the core number would be unchanged, which basically is a message to the Fed that, whatever you want to do, is fine.
25 or 50?
25 or 50 is fine.
I feel like we won't settle that debate in 5 minutes' time, but we'll try. Mike McKee's going to stick with us. Coming up in just a moment, we'll speak to some economists. David Kelly of JP Morgan Asset Management, Steve Rasciuto of Mizuho, reacting to breaking CPI data. That inflation data drops in 5 minutes' time. Equity futures a little bit softer. We're down 0.1% on the S&P 500. Check out the bond market. The rally continues from the front end to the long end. On a 2-year, down a basis point. On a 10-year, down 2 to 362. From New York City this morning, good morning. Inflation data up next.
Lots happening on Wall Street.
I couldn't have been more wrong.
It's going to stay volatile for a while longer.
It's a bifurcated market.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
Year over year, you could start to see some cracks.
It might be overhyped short term, but it's underhyped long term.
From businesses most influential and instrumental.
A lot of the doom and gloom has been somewhat overblown.
If you're not living near the edge, you're taking up too much space.
Bloomberg Wall Street Week, only on Bloomberg TV and radio. Context changes everything.
Always on the heartbeat of the tech sector.
Spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that.
Sure. Don't miss Bloomberg's interview with the
Welcome to the world of decentralized finance.
With the surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people.
This is a political attack, and we must hold our elected officials accountable.
The transactions.
Really a record-breaking moment.
Bitcoin is the exit strategy.
And the technology.
Awareness is going to grow, and these things grow the overall industry.
Crypto as an asset class is here to stay.
Bloomberg Crypto, only on Bloomberg.
60 minutes away from the opening bell and just seconds away from inflation data in America. The last CPI print going into the Fed's decision a week from today. The scores look like this. We're down 0.1% on the S&P. On the Nasdaq 100, we're also down 0.1%. Similar move on the Russell. The small caps, no drama. Switch on the board and get to the bond market. The scores at the front end of the curve, yields still falling, down a basis point or two. The 2-year, 357.73. With economic data, here's Mike McKee. Good morning, Mike.
Good morning. We have a little bit of an inflation issue here. On the core side, we're up 0.3% during the month, just 0.2 as forecast for the headline. On a year-over-year basis, that pushes core to 3.2%, which was what was forecast. So the base effects come into play on an annual basis, and it doesn't really matter that we had a little bit faster inflation there. On a headline basis, CPI 2.5%. That's a big drop from 2.9%. But again, that's somewhat base effects. We'll take a look at what the 3-month, 6-month moving averages are, and we'll take a look at what the components of all this are, John.
I'll walk you through the first move in the market, and I'll stress what I always say after a big data point. First move, not always the right move, but this is the move. Yields higher at the front end by 3 basis points, and a suggestion, I'm sure, from many who are looking at this move, that this is the difference between going 25 and 50 at the Federal Reserve. The 2-year up 4 basis points, the 10-year up 2 basis points, the dollar a little bit stronger, dollar-yen unwinding, almost unchanged now on the session on dollar-yen at 142.30, and equities pulling back, Lisa, on the S&P 500 by 0.6%.
I don't usually say this. Usually bonds are the best indicator, always the most interesting asset class, 100% the one you should watch. But I will say that this reaction in the equity market is more interesting because the idea of a 50 basis point rate cut being taken off the table somehow is negative for equities that maybe we're baking that in a little bit more. That's the only assumption I could possibly imagine at a time when some people were saying that actually disinflation would be a bigger risk to stocks than a little bit of inflation.
There would be the belief, not necessarily mine, that this could constrain the Fed put and constrain their ability to respond to downside risks or get ahead of potential downside risk materializing. That's the way this will be seen this morning. So yields up at the front end by 5 or 6 basis points, equities down, particularly on small caps, the Russell down by 1%. That makes sense if that is what you believe. We'll see what we get a week from today.
Yeah, but it doesn't make sense if you believe that actually this is a gauge of the fact that demand isn't falling off a cliff and that the economy isn't struggling and that people are still spending and you see real wages tick up. So you can kind of pick your narrative. Right now, the narrative is that the Fed put might not be as strong as it was, and I believe that what you're saying right now is very much was being priced in. This is a confusing moment, and it just highlights how the reaction function of markets is not very clear. It's the reaction function of the Fed, which is maybe a little bit more clear, although unclear on the magnitude.
Bonds still falling, yields still rising, up by 5 or 6 basis points. The 2-year 365, the 10-year, just bear in mind, before today, every single day in September, the 10-year yield has dropped. It's up by just 2 basis points right now to 366. We've had a big rally in fixed income. Mike McKee, you've had a couple of minutes to go over the numbers. What's screaming, jumping off the page to you?
Well, the inflation we're seeing in this report is basically where we have seen it all along. Now, used cars and new cars prices were not really changed very much. New cars flat and used cars down 1%. But owner's equivalent rent up 0.5%. That's an increase from the prior month, and it is so large as a component of CPI that is what the BLS has really pushed up the core here. The motor vehicle insurance number up 0.6%, still rising a little bit less than it had been. Airfares up 3.9%. On the other side, we have energy commodities like gasoline down 0.6%. You probably knew that at the pump. And food, which of course has been a big argument in the political world. Food at home flat, grocery prices flat after a 1/10 gain last month. So really, grocery store prices aren't rising, at least according to the BLS. I'm sure you get people at the checkout counter saying, oh, it's still so much more.
Yeah, especially the computers that are checking you out. I am wondering, though, about the housing component. That, to me, is really significant, given the fact that there are people who challenge whether this is a lagging indicator, whether this is an accurate reflection, and how much really what some people would say is a broken housing market has contributed to the stickiness of inflation. How much is that essentially what you're seeing in the data?
Well, the housing, if you took housing out, and I can't do the math in my head, but if you took housing out of this, you would probably have a very close to flat CPI for the month. And I think that's what the Fed is going to do, because they know they're not affecting that at this point. It's supposed to be coming down. And then if you look at the rest of the world doesn't do housing like the U.S. does housing in CPI. And so you can make a case that underlying inflation, which is what officials at the Fed are making, that case, underlying inflation is still coming down.
Given what's going on, though, with core, how difficult would it be for Powell to really gain consensus for something like a 50 basis point cut?
I think it'd be harder for him to do that. Part of it is image. the optics of what you're doing. And if you have to explain it and try to convince the American people, they don't focus enough on this stuff to really buy it and to listen. So the easy story to tell is the 25 basis points. We're seeing inflation come down. The job market is still good. The economy is still good. We can start the cutting cycle now. But it doesn't look like there's an emergency in the economy, and it doesn't look like inflation is going to go shooting up again.
Mike McKee, thank you, sir. Very, very marginal stuff. The wrong kind of upside surprise. Core CPI coming in at 0.3 month over month. The median estimate in our survey, 0.2. I have to say the overwhelming majority of economists were looking for 0.2% in our survey. The market reaction to all of this, equities down by almost 1% on a Russell on the small caps. At the front end of the bond market, in fact, throughout the bond market, the whole yield curve now shifting higher by about 4 basis points on a 2-year to 364. With that move, as you might expect, some dollar strength, so dollar yen turns around off session lows. The dollar buying you essentially a little bit more Japanese yen after this, as if you needed any more. Dollar yen right now at about 142. David Kelly of JP Morgan Asset Management and Steve Rasciuto of Mizuho join us now for a little bit more. David, let's get into the data first and your reaction to it. Is this noise or news for the Federal Reserve?
I think it's more noise than news in the fact that the core number was slightly higher than expected for the month. If you look at it, we got a 3.9% jump in airline fares. They're very volatile. They were down last month. They're not, given the number of people traveling, frankly, it's amazing that we don't have more airline inflation. We also got a bump in tobacco prices, which are pretty volatile month to month. But outside of that, it's very much on track. And I've been talking for a long time about, how the economy is, or how inflation is cooling. It's just cooling too slowly. Well, I can say that it is now cooled to room temperature. I mean, at 2.5% year over year, there really is not a significant inflation problem. I realize that, shelter is going to take a little while to come down from here. But even on things like auto insurance, 0.6%, at least it's coming away from a 20% year over year gain. So overall, it looks very well controlled to me. It looks like we're not seeing deflation. We're just seeing a gradual disinflation. The inflation is gradually coming out of the system. And frankly, unemployment 4.2%. CPI inflation 2.5, add those together 6.7. That's better than it's been 85% of the time over the last 50 years. So it's really not a bad economy. It's a good economy, and I don't think it calls for any drastic Fed action. I'd be very happy to see 25 basis points next week.
So we're in the quiet period. We've got all the data now. Given what you just said, David, does this reinforce the case that we get 25? I know you'd be happy to see it, but do you expect it?
Yes, I do, because I think the Fed must be aware that if they go aggressive here, they're in danger of undermining consumer confidence. And honestly, the economy is doing exactly what they wanted to do. It is settling into a softer expansion, a slower expansion. That's what they want. So they only have to gradually return to normal on interest rates.
This, to me, is a really interesting moment. David Kelly and Steve Rasciuto, I think, are going to agree. Steve Rasciuto is here, and is this something that you kind of agree on, that 25 basis points is the appropriate and logical conclusion from this data we just got?
Yeah, 25 has been our call for quite some time. We haven't changed it. We didn't fall into the overall concept of 75 basis points or 50 basis points. This rate cut arms race that my colleagues on the street have been engaging in, I think has been counterproductive. I do think the reality of the situation is one where, it is a healthy economy. And that really goes against the point of, well, then I really can't get into the inflation numbers and throw this and that out and say it's really going nowhere or it's room temperature. And taking out the household component of this, the rental component of this, I also think is wrong. Because when you look at the dynamics of the rental market, we were all worried about the excess build of residential real estate. And guess what? It's all being used up. So I don't think rents are going to be something that comes down. And I think it's indicative of the fact that the economy is fundamentally healthy. And a 4.2% unemployment rate is low. And therefore, it is a healthy economy. So the Fed should be moving people's expectations back from these large rate cut discussions into a much more gradual, steady approach at getting back to neutral and really begin the debate over what is neutral, because their number of 2 3/4 is much too low.
Yeah, no one really wanted to engage with that in any kind of verbal way. In Jackson Hole, I am curious if you're surprised by the market's reaction right now that equities are lower, at least initially, understanding it's not always the correct move or the one that's going to stick. But does it make sense to you that it would be lower by taking 50 basis points, maybe a little off the table?
Yeah, because if I have a possibility of the Fed overstimulating, I'm going to have a bit more inflation. And if I have a bit more inflation, guess what? I'm going to have better earnings. I'm going to have a stronger economy and better earnings. So I think, you know, as Jonathan was talking earlier, I think what the market is really doing is saying, okay, we have a really good economy. We know we can get this level of earnings. If they're going to really push this thing with 50 basis point cuts, as a lot of people want to anticipate, we're going to have an economy that is going to potentially accelerate in 2025. And I could potentially think about raising my 2025 earnings numbers, not cutting them.
Steve,
for 15%.
When you talk, you sound that rosy. The economy is doing very well. Do you think there even should be a rate cut?
Look, you've reached, excuse me, you've reached a point in the cycle where inflation has come down to a level that you could begin the process of normalizing rates. The real question is, where is that level of neutral rates? And this is the debate, to me, that really matters, because I think the neutral rate is 4%. A 2% real return, a 2% inflation target, assuming they can get there, 4% Fed funds rate. The Fed is thinking 2 3/4. The market is thinking 2.5 to 3. So they're basically in the 2 3/4 category. That's much too low. And if we get to that subsidy level of interest rates, then you wind up pushing the economy. And I think this is where the Fed is not doing its job. The Fed really wants to believe that we're going back to that post-financial crisis, pre-COVID period of exceptionally low levels of interest rates. And I just don't see us getting there, because that was a unique period in time where we had what? We had a debt overhang, we had a bank restructuring, and we had a massive tax increase.
Steve, you're echoing something that we heard from Torsten Slok. He was basically indicating the same thing. He was asking the question as to whether we are actually sufficiently restrictive. David Kelly, I know you've got thoughts on this matter, so let's discuss it with you as well. Where's neutral? How are you thinking about neutral?
Yeah, I know Steve and I are supposed to disagree, but I think we're quite close in this one. I would say 3.5 to 4%. I mean, if you look at the 50 years before the great financial crisis, the federal funds rate averaged 2 percentage points above core CPI inflation. If we end up at 2% on inflation, I have no problem with the federal funds rate at about 4%. But I do think that, and I think the Fed's long-term target will probably gradually go up. It certainly should. But I also think they should gradually move rates back down to that level, because I think we are suffering today from the aftermath of interest rates which were way too low between the great financial crisis and the pandemic, and that caused an enormous inflation in home prices and other asset prices. You know, the carrying cost of crazy was 0, and so we've got a lot of crazy bets out there. Now, I think a lot of Americans are locked out of the housing market right now because home prices are too high given a normal level of mortgage rate. So I want them to, you know, if there's nothing wrong with the economy fundamentally, if it's basically on the right track, you shouldn't have an active policy either way. You shouldn't be restrictive. You shouldn't be stimulative. You should get back to neutral. And neutral is less than, 5 to 5.25%, 5.5% of the federal funds rate. So they should get going, but they should go slowly, because there's no need to upset anybody here. Just gradually get back to neutral.
Bond market's still falling. Yields up now by almost 10 basis points at the front end of the curve. On the 10-year, up by 4 basis points. And that 2-year, 10-year, just turning negative. Just briefly, we'll see if that sticks for the 5th time on this program. Steve Asciuto, I want to come back to you. You touched on it, the differences between now and 2019. The difference between where you think neutral is and where the Fed is, anywhere between 100 and 150 basis points. Why are they still there in the 2s? Is it because they don't want to have the conversation yet? They don't want to signal where things are? They haven't thought about it? Or do they truly believe this is where neutral is?
No, again, I think the policymakers that you're looking at are political economists. And getting back to that low level of interest rates allows them to do things that they would like to do. It allows them to try to create an environment where they're going to try to rebalance income distribution, and they're going to try to grow the employment rate and grow wage and salary income to make up for the shortfall that was created by the COVID inflation. And I think this is their underlying motivation. I can't argue with the motivation. I can argue with the tactic to get there. I don't think the aggressive adjustments or the fact that we have to get to lower levels of rates are going to do it for them. I think they're better off doing, again, David and I agree, doing a very gradual approach to allow the economy to adjust to this, allow the economy to move on its own basis, not based on policy stimulus. This is a Fed that I think wants to add policy stimulus in 2025 when there's going to be less fiscal policy stimulus. And then when we get a new president, we get a new budget, we're going to have fiscal stimulus in 2026. So they're going to try to juice the economy as long as they can because they believe global deflation bails them out.
I'm not sure if I should be happy or nervous that you both finally agree, but this is what we've got.
Scared.
David Kelly, Stephen Asciuto, To the both of you, thank you guys, appreciate it. Inflation coming in just a little bit hotter than expected. Lisa, at the front end of the curve, we're seeing a sell-off in bonds and a bit of a pullback in equities as well off the back of this.
You know, it's interesting. You were talking about that 10 basis point move in yields, and that sounds like a lot, but based on recent moves, it hasn't been that much. I wonder if this is the new normal, right? That without some sort of guide from the Fed, without some clarity, if this is the kind of move that we're going to see on an ongoing basis.
Are you expecting to see some notes that now say 25 instead of 50?
Pretty much across the board. That's what the market's saying. If you look at world interest rate projections right now, there is about 29 basis points of a cut being priced in. Basically, it's 25 basis points that's being priced into the market now.
Certainly feels like that's the base case as this market prices out the more aggressive tone at the front end of the curve that we've seen build up over the last month. We're up by 9 basis points on a 2-year to, let's call it, about 360, 370. We pause now for a moment of silence, being held throughout the city of New York and across this country and around the world in remembrance of the September 11th terror attacks. At this time, 23 years ago, hijacked American Airlines Flight 11 struck the North Tower of the World Trade Center.
Right, quick, march.
Is the Vivian Tom clientele? Yeah, power women, like the dragon women. They're lawyers, they're CEOs, they're all important decision makers, women in the world. Why do you position your products for this group of women? When I started, designing, I always want to do something that is empower women. When you take a look at your store, there is something for everyone. Take a look at the T-shirt, for example. My customer growing, like 30 years already, so they become more powerful. I also want to grow my Gen Z audience too, They are like in the 20s, so it's a more affordable price for them. And then, my powerful women's daughter wearing their mom's dresses, and they feel that the power, the energy. So now they come back to the store and they buy more.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action, every weekday, only on Bloomberg Television. Context changes everything.
40 minutes away from the opening bound, pulling back by 1/3 of 1% on the S&P 500. A little bit more on the small caps this morning with a sell-off in the bond market. The 10-year is looking at a yield that's higher by 4 basis points. The 2 years down and yields are up by 8. In foreign exchange, the dollar is now stronger. Dollar yen had dropped to 140.71 earlier in the session. It's now back at 142.40. We had some economic data about 20 minutes ago. CPI coming in hotter than expected, 0.3%. Month over month, excluding food and energy, so that's the core print. We were looking for 0.2. That very marginal difference, apparently the difference between the Fed going 25 instead of 50 a week from today. We'll have that conversation in just a moment. As we count you down to the opening bell, a couple of things to watch for the markets in the next couple of days. Here's your trading diary, the calendar, the agenda. Tomorrow we'll get an ECB rate decision, US PPI data plus another round of jobless claims, and on Friday, UMich consumer sentiment report comes out as well. And Mike McKee's with us around the table still, our economics and policy correspondent. Mike, that was the last CPI print going into the Fed decision a week today. There is a feeling that this shifts away from 50 and shifts the conversation towards 25.
It wasn't definitive, so it didn't make a real case for 50 basis points. But I want to go back to what we were talking about earlier with the impact of housing on this. And if you take housing out, how inflation has really come down. You look at the 12-month rates, and we talked about that, 2.5% for the headline, 3.2% for the core. That includes inflation a year ago, which is not relevant to the Fed anymore. You take a look at the 6-month moving average, and it's 2% for the headline and 1.8% for the core. And then if you look at the 3-month, the most recent 3 months moving average, 1.1% for headline CPI and 2.4% for core. So inflation has really dropped. And if you look at those numbers and think about how PCE translates, 3, 4, 5 basis points lower, the Fed is in a good position to cut. If they felt there was a need, they could point to those numbers and say, we could do 50.
Right now, the market is saying they won't. Right now, the market is saying they're going to go 25 basis points because that way they can go gradually and kind of not spook anyone. Is there any data between now and a week from now that could change this picture? University of Michigan sentiment survey, anything that really could potentially tip the difference?
I don't think so. There hasn't been any indication. We saw the New York Fed numbers on inflation expectations. They didn't move really. The Michigan expectations numbers, even if they move, wouldn't move all that much. So I don't think that would be the only possible thing that could derail it if people suddenly said inflation was coming back. But with these kind of numbers, you don't think that's the impression that people are going to get because food prices, as we said, leveled out. Gasoline prices went down.
So, Mike, are you calling it? It is no longer debate. It's 25?
Oh, I did that on Jobs Day. But yeah, I think 25 basis points, because that's the Fed's kind of base case. They're risk averse. They are in the process of managing risk, and they would rather do 25 and see what happens rather than do 50 and then have some sort of surprise where they'd have to backtrack. So I think at this point it is likely to be 25 unless there's something we don't know about, which of course gets to that argument of what do they know that we don't know.
Of course, not much. There were 2 Chairman Powells in the summer. One Chairman Powell suggested the labour market was strong and that's a reason to wait, a reason that we can be patient. Then Chairman Powell in Jackson Hole, Wyoming sounded like a 50 basis point rate cut chairman. Which chairman do we hear from next week after that inflation report?
I think you'll hear more of the 25 basis point chairman, but one who expresses confidence that inflation is now going to get to their target, and so they therefore can continue moving. And then you look at what Chris Waller said about if we see further data showing the weakening of the economy, we could front load, we could go to 50. So that'll be on the table for a while till we see all the data ahead of the November meeting.
We hear a little bit more from the man from Sintra and not the man from Jackson. Is that fair?
Probably. What I'd like to see is actually dissent. What I'd like to see are some of the people who are calling for 50 basis points and saying just make things accommodative right now. Austin Goolsbee, for example. Austin, I'm looking at you. Chicago Fed president. If you dissent, I think that would be a valid way to sort of represent that people do have different views in the FOMC committee. Just suggestion.
Who are the voting members you're looking for that might dissent next week?
I think the only one that would be a possibility would be Mickey Bowman. She's been fairly firm on that, but the problem is she's a Fed governor, and we haven't had a governor dissent since 2005. So it would be seen as a big deal, so she would have to really feel like it was important to make that case.
19 years.
Sure. Yeah.
19 years since the governor dissented on the FOMC.
But this is the issue. They clearly disagree with one another. What's the problem, right? Why not just represent the views in something other than commentary, just to highlight, look, we're not sure, so, you know, don't read too much into this. We're just humans.
This bond market keeps selling off. Yields are higher by 7 basis points. The equity market a little bit softer. Lisa, as you look at things going into the opening bell, what jumps off the page for you?
I want to see equity response to the idea that the Fed isn't going to necessarily cut by 50 basis points. That, to me, absolutely the most interesting.
How constrained is that so-called Fed put?
Yeah.
I think that's a big question for us all over the next week. Coming up tomorrow, Sharon Bell of Goldman Sachs will catch up with Mohammed Al-Aaron of Queen's College, Cambridge, Mike Schumacher of Wells Fargo, Lindsay Piegza of Stifel. From New York City this morning on September 11th, as we often say, time may pass, we will never forget.
The countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have take two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
One of the institutions you've been very philanthropic with is your alma mater, Harvard. But recently, you've been very public about your criticism of the way Harvard handled the events of October 7th and their aftermath. Could you talk about that now?
The first reaction of a group of 34 Harvard student clubs on the morning after October 7th was to put out a statement saying that Israel was 100% responsible for the acts of Hamas. And my view on that was, you know, that's ridiculous. You can come out and say, look, I'm very unhappy about Israel's how the treatment of Palestinians in the West Bank, or you can say, you know, we can talk about the Gaza Strip, but you can't support terrorists, and particularly terrorists that rape and pillage and, you know, murder and burn and take hostages. Well, I got actually a text from a CEO in my industry. He's like, Bill, you know the people at Harvard. I'd like to know who the students are behind these clubs, so I make sure I don't inadvertently hire them. And so I tweeted out that sort of made that point, and caused a bit of a firestorm. And I got a lot of pushback. Oh, why are you picking on students? And I said, look, you can't hide behind a corporate entity if you're going to support terrorism.
There are many global investors that aren't interested in China anymore, but there's a lot that are. And obviously the local investors have money in China and are doubling down on investing in China. Many of the Asian investors, and in fact a lot of the Middle East investors, the Americans are gone away. Therefore, there's an amazing opportunity to put capital to work and get returns which are excess what you would get in other places. Where there is lack of money, there is usually opportunity. So we continue to build out our business in China. It's just where the money's coming from is different. And so we're raising local money in China for investing and bringing those that choose to be there to invest in China. So it's just a different, where the money's coming from is just different.
We've got about 30 minutes until the start of trading. Welcome to Bloomberg Open Interest. I'm Matt Miller.
I'm Shonali Basak.
And I'm Katie Greifeld. Of course, two of the biggest stories in markets this morning are last night's presidential debate and this morning's CPI print. Markets clearly responding to the latter right now. You look at pricing with about 30 minutes to go until the opening bell. The S&P 500 down about 0.2 0.1%. The NASDAQ 100 back to unchanged, of course, in the futures market. Interestingly, you take a look at the 10-year yield, up a little bit, 3 basis points. The real action is in the 2-year Treasury yield, of course, up about 6 basis points to 7 basis points right now as traders really trim back their bets on a 50 basis point rate cut. Right now, we're priced for about 29 basis points of easing at next week's Fed meeting. On August 5th, we were pricing in 49 basis points of Fed cuts. So clearly a bit of a rethink going on in this morning's trade.
Yeah, the 2-year, of course, going to be most sensitive to any change in expectations for rate cuts. We've got a fantastic lineup of guests to talk us through the inflation data as well as the presidential debate last night. We're going to kick it off with former Bridgewater chief strategist Rebecca Patterson. Omer Sharif of Inflation Insights is going to join us to give us his take, and Henrietta Trays of Veda Partners joins us, as well as CEO Howard Lutnick, very close to the tragedy of 9/11, as well as the presidential election right now, because he will be Donald Trump's, if Trump wins, he'll be the co-head of his transition team.
And it's really interesting. He's actually with Trump and J.D. Vance this morning down in Lower Manhattan. But to that end, you have to wonder what is going to drive the narrative now. Many people thought the presidential debate was really what would set the stage, but you had that CPI surprise, and it really comes down to shelter costs. We know this is a politicized issue in this environment.
Right.
There are still at least 50 basis points of rate cuts priced in to later this year after the election for both sets of meetings.
Well, shelter costs, of course, rising by 0.5%. That was a big surprise. Of course, Constance Hunter on Bloomberg Radio highlighting that that's a problem for the Fed. What's interesting, though, is this move in core. You have to wonder how much this really factors into what the Fed feels like right now, because the room temperature of inflation is coming down, but clearly this report showing that it's not completely extinguished.
Yeah, I guess I hadn't really thought of it as a big surprise myself, since it's only 0.3%.
You've got to go out on the decimal
How
point.
much control do they have over housing at the end of the day?
Yeah, we'll get into all of that, the nitty-gritty of the inflation numbers, as well as how the Fed could or should react to that on September 18th, but the debate front and center. Also, it is September 11th. Today marks the 23rd anniversary of the 9/11 terror attacks that hit New York City and Pennsylvania, as well as Washington, D.C. in 2001. We honor the victims, first responders, and all of those around the world impacted on that very day with a moment of silence in observance when United Flight 175 struck the South Tower of the World Trade Center.
And migrant. And my grandfather, FDNY Captain James J. Corrigan. We love you so much and we miss you so much. Me and my 3 sisters wish we got to meet you.
Gary Eugene Bird.
Joshua David Birnbaum.
George John Bishop.
Chris Romeo Bushundat.
Jeffrey Donald Bittner.
Albert Belayla Blackman Jr.
Christopher Joseph Blackwell.
Carrie Rosetta Blackburn.
Susan Leigh Blair.
Do you think it'll be the case where someday you will be an investment committee or I'll be an investment committee and we just apply AI, decide whether it's a good deal or not, or we're not going to be there anytime soon?
I don't think we'll be there in the near term. And David, because being on investment committees, there's the analytics of the math, there's the people, and then there's judgment. So analytics and math, I think AI will help us get way more refined. Right now, we have analysts building models upon models. Our typical investment memo is 86 pages. So we could refine that down very, very seamlessly to pieces. The people aspect to it, to make a judgment call on, do I believe this entrepreneur is going to go the next mile? Do I believe that the background of the entrepreneur, who they are, what they stand for, their values, their family, that's the harder one. I think AI is going to take some time to get there. And then the final piece ends up being judgment. And I don't believe we've seen anything yet that gives us a sense of judgment that we're able to apply.
Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
This is Bloomberg Open Interest. Let's take a look at where markets are trading. Less than 30 minutes to go until the bells ring. You can see a bit of a recovery underway in the pre-market. The S&P 500 before the bell rings currently flat on the day. We had been lower. Same story, too, if you look at the NASDAQ 100. A more dramatic move there. Of course, big tech going from negative on the day to up about 0.2% as markets work through, of course, that CPI data that we got at 8:30 Eastern, showing a little bit of a surprise to the upside on core inflation, but still looks like we're shrugging it off, at least in the equity market. The bond market, an interesting story as well. The 10-year yield of about 3 basis points, but the 2-year yield, where you should really be focusing your attention, Matt, currently up about 7 basis points.
All right, for more on that inflation data, we're joined by Michael McKee, Bloomberg's chief international economics and policy correspondent. So, Mike, a little bit of a jump. I guess it could be looked at as a big surprise to the upside on the month-over-month core number, but everything else is bang in line and inflation looks pretty tame.
It does, and it is. At this point, the numbers that pushed inflation higher on a core basis come from housing, as you mentioned, up 0.5% during the month, and from airfares, which were up 3.9% during the month. Kind of volatile figures, and the Fed, of course, can't really affect the housing in numbers at all. So as you can see, we are still on the inexorable path down towards 2%, and that's on an annual basis, which includes inflation a year ago that nobody cares about right now. On a 3-month basis, we're at 1.1% and on the headline and 2.4% on the core. So the trend is clearly lower and lower and lower. And as you mentioned, we are seeing a change on Wall Street in their thinking about what the Fed's going to do. We are now down to a 25 basis point cut. 29 basis points is the futures priced in. And so we're not looking at this point like 50 basis points is expected by anybody anymore after this CPI report. One other thing I want to mention, because you talked about, Katie, at the top of the show, the two important things this morning were the CPI and last night's debate. Last night's debate, there was talk of food prices. Food prices completely flat during the month. There was also talk of bacon prices. Bacon prices were down big. And of course, if you need to replace, say, your pets, pet prices are down.
There you go. Pet prices are down.
Why would you need to replace your pets?
That's the thing. There's not a lot of turnover in those numbers, I imagine.
Unless someone's been eating them, right?
He was definitely waiting to say that for hours this morning. Anyways, Michael McKee, we thank you so very much for your analysis. We now have Rebecca Patterson, former Bridgewater Associates Chief Investment Strategist, joining us now. A little less on the pet prices, a little more on kind of the undertone there. There's politics and policy, and then there's the actual numbers we see in the data here. If we kind of sit here today and kind of incrementally rewrite the narrative into the end of the year, what's going to matter going into that Fed meeting and into the election?
So I think the inflation today at the margin is tilting investors towards 25 basis points in September. And then the question is, do we get 25, 50, the final two meetings of the year? It will depend on the data. I know that's a horrible answer, but it's true. I think the bigger deal is going to be next year. I think there's two big question marks around the market pricing for Fed funds next year, which is still, even after the CPI, we're looking at total between now and the end of next year, about 250 basis points of rate cuts next year priced into the market. So one question is the election. If former President Trump were to win a second term, I think the market is perceiving that that would be relatively more inflationary. That could slow the Fed down with rate cuts, so that's an important factor. He would probably need a sweep for that to be truly impactful, but even without a sweep, he could push forward on trade policy, on immigration policy.
Yeah, it does look like the most inflationary aspects of his plan are the ones that he could push through himself.
Correct, without Congress.
Yeah.
But then the second factor that I don't think is getting enough attention is the transmission of monetary policy. How smoothly does it flow through to the economy? And with so many mortgages, 60% of mortgages locked in below 4%, and with so many corporations, especially larger corporations, with long-term fixed low borrowing costs, it might take quite a bit of easing to start see that support, if you will, come through to the consumer and the business sector.
Well, there's a lot to dig into there, of course. When you think about the politics, who knows what's going to happen? Of course, the polling going into this was 50-50. It's going to be interesting to see how that shakes out. But you make the point in your notes that the Fed can't anticipate what's going to happen. They have to react to the data that we have on the ground. So you think about the numbers that we got at 8:30. You think about, you go through, of course, what we learned with shelter, pets even, and food. And one of the arguments that people in the 50 basis point camp were making was that basically policy rates north of 5% are way too restrictive for where we actually are. So you extrapolate that forward. I mean, how much easing outside of politics do you think that this Fed has to put through before it starts to make a difference?
Yeah, I mean, I think what we heard last week from Williams and Waller, what we've heard from Chair Powell, is that they agree. The policy rate is very restrictive. It is time, given the inflation data, given the labor market softening, for them to move closer to neutral. The question, I think, that I don't think is resolved yet is, what is the speed of that easing to get back to neutral? And then what is neutral? I think there's still debate on what the long-term neutral rate is. Now, the September—
And always will be.
Of course.
Yeah.
The September meeting will be important because we will get a new set of dots from the Fed, a set of forecasts from the Fed. So we'll see if there's any incremental change in their thinking. But again, the election next year could matter in terms of affecting our thinking on long-term neutral.
Well, and maybe in terms of Fed policy, right? They don't want to look like they're supporting the Biden-Harris administration. And a 50 basis point cut, I think Donald Trump himself may put out a post on Truth Social saying that the Fed is in the Biden White House camp.
They're going to get politicized no matter what they do. I would put my hand on my heart saying they don't care about the politics. They're going to do what they think is right for the economy and their dual mandate. But I hear you. Whatever they do, one party or the other will try to spin it.
Well, Rebecca, hang tight for a minute here. Let's get deeper into the politics because Americans got a clearer picture on the policy outlook for Harris and Trump at last night's debate. Here's how they targeted each other's records.
We've had a terrible economy because inflation which is really known as a country buster. It breaks up countries. We have inflation like very few people have ever seen before, probably the worst in our nation's history. We were at 21%, but that's being generous because many things are 50, 60, 70, and 80% higher than they were just a few years ago.
His plan is to do what he has done before, which is to provide a tax cut for billionaires and big corporations, which will result in $5 trillion to America's deficit.
And Bloomberg's David Gura is in Philly with more color on the ground. And David, bring us into the spin room after the debate concluded last night. What was the mood music like?
You know, we had surrogates from both candidates there in the room almost immediately afterward. In fact, some got there before this debate even wrapped up. Both sides eager to claim victory in that debate yesterday. And they wanted to talk about the economy. This was something that came up before the debate. I talked to Governor Roy Cooper of North Carolina. He said this is what Vice President Harris had to emphasize during that debate. He and I spoke again after the debate. He was pleased with what she had to say. You know, this was a policy point that she really wanted to stress and did stress during that debate at the beginning and at the end. And I think if you look at Donald Trump and the way that he comported himself during the course of this, yes, he talked about inflation. Yes, there were economic issues that came up, but it was a decidedly less disciplined candidate than we saw back in June in Atlanta. There were moments, there were opportunities when he could have talked about his tax policy plans. He could have talked about the economy in specific. He elected not to do that over the course of the debate, and I think that there was some frustration among his surrogates last night that he didn't stay as focused as he did during that first debate against current President Biden. And what we saw over the course of it, over the course of the evening, was Vice President Harris very effectively baiting him over the course of that debate to sort of move beyond, again, policy specifics, in targeting her record even, to talk about things that we know animate him and he likes to talk about, that are things that his advisors, his chief advisors, do not want him to talk about. So again, that was so effectively done back in Atlanta. I think a lot of people were surprised by the way that he maintained a disciplined posture in that debate. That was certainly not the case last night, guys.
All right, David Gura, thanks very much. We're going to check back in with you in just a few minutes. I want to get back to Rebecca Patterson of Bridgewater here on set. It was interesting to me that because we just saw him last Wednesday at the ECNY, and he was so composed and in control and stayed on point. And this was not that same president. He did
was
horrible.
reading off the teleprompter, one of my sources say.
Of course, he's reading. Of course, he's reading off the teleprompter.
Off the he
but
wrote
yes,
the script.
it's Donald Trump, right? I'm just saying he did a very good job, you know, in editorializing a little bit at the ECNY, and he was not the same person. He was more like, you know, your wacky grandmother that spends too much time on Facebook last night.
Also editorializing.
Yeah, of course. But does it, yeah, because he's saying things like people are eating cats and dogs and, you know, these so many bold-faced lies just continually, that she's going to ban fracking on day one, that she's a Marxist, you know, that he had nothing to do with January 6th. Does it matter, though, Rebecca? I mean, how much do presidential elections matter to investors?
You know, right now, the media, all media, are very focused on the election because it does create a large amount of uncertainty between now and November. We'll find out when we learn who the president is. I don't know if it'll be the morning of the 6th. It might take a few days. But in the grand scheme of things, if we look over the next 2, 4, 10 years, the policies coming from the government are a factor, but not the only factor, right? So it matters, but we shouldn't be overplaying it. We have to care about monetary policy. We have to care about global growth, not just growth in the U.S. We have to care about industry trends, what happens with technology and AI here in the United States, regulation. All of these things are what drive the market, not just the politics. So yes, we should focus on it. Trump, especially if he wins, if he has a sweep, that's going to be a meaningful policy change, which I think is going to increase bond issuance, increase inflation, push up bond yields. The tax cuts might be supportive for earnings, but there's a lot of opposing forces here. I'm not sure that he would necessarily be better for the economy. We're going to see that play out in the short term in the betting markets. We see that in the financial markets today as well, a little bit. But I think as we go ahead, if Harris wins and it's a divided Congress, which seems like the more likely outcome if she wins because of the Senate, I think the policy changes are going to be incremental,
Rebecca,
and so it won't matter as much.
Beyond investors as well, we had this debate last night. We had everyone's take on the debate. At the end of the day, it's a finite number of swing states that are going to matter most in this election.
Yep.
Did she move the needle with any of those voters enough, despite how yesterday went?
I think it's too early to know if she's changed any swing state votes, but I think your point is a valid one that needs to be underscored, that at the end of the day, this election is going to be about 7 states and really probably a few counties in a few of those states. So it's going to be tens of thousands of voters who decide the election, and what they care about most are things that the Fed necessarily can't fix in the short term, right? Housing supply, the cost of housing, the cost of living. And so the election is going to matter a lot in terms of making those voters happy or not. But have we changed their minds from the debate? I don't know yet.
All right, Rebecca, great to have you here. Thank you so much for joining us on this really important morning. Rebecca Patterson is going to stick around and stay on this program. Of course, down at the New York Stock Exchange and at the NASDAQ, we're going to continue to honor those that we lost on September 11th, 23 years ago. Those exchanges are now going to observe a moment of silence in order to remember the 9/11 terror attacks that shut down trading and, more importantly, killed so many colleagues and loved ones, as well as first responders. Let's join in.
was going to keep rating World Cup. This is a 3.
As the economic picture.
Covering the intersections of Hollywood, Silicon Valley, and beyond.
It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, the China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Welcome back to Open Interest. We're back now with Rebecca Patterson. She is former Bridgewater Associates Chief Investment Strategist. Obviously a big focus on CPI and a big focus on politics right now after last night's debate. And there are elements of day trading going on today, both in the prediction markets and in the stock market. Shares of DJT currently down about 15.5% pre-market. But from the investor's perspective, if you have a medium-term, long-term outlook, how should you be thinking about what we're going to get in November?
I mean, history shows us, and I think this time is not different, that the months leading into an election tend to be bumpier because you have greater levels of uncertainty around what policy is going to be. Once you get through the election and you have more clarity on policy, equity markets, assuming the economy is not going into recession or in recession, tends to do better. So I think if I'm positioning for the next 50 whatever days left, we have 6 or so, and maybe even a few days after the election. Remember, Wisconsin, Pennsylvania don't start counting votes till the day of the election. It could take a few days. Plus, we're going to have a lot of validating of votes. It could be days or even weeks before we actually know who the president is. So I think you want to be positioned defensively for this next stretch into early November. And I think that includes things like staying in large caps rather than small caps, even though the Fed is cutting rates. I think that includes gold. I think that includes treasuries. And if you want to look outside of the United States, UK stocks, incredibly cheaply valued, not owned, and very defensive. They have a lower beta, if you will, than a lot of other markets.
Is it, and I'm going to ask this question to our next guest as well because she likes big cap tech stocks, but is that trade a little bit too crowded? Hadn't we seen that when the yen, and I think yesterday the yen hit a high for the year and erased all its losses. When the carry trade gets unwound, those stocks get hit, and that whole herd, piles out of those stocks.
I mean, there's a lot of things buffering the mega cap tech stocks right now. The yen carry unwind potentially, as well as regulatory hits from Europe and the United States. And then to your point, it's still a crowded trade. Valuations have come down, but you're still looking at valuations around 30 versus the S&P, which is closer to 21. I'm talking about an aggregate for the big tech. And so much good news is priced in that you don't need much disappointment to see things fall, as we've seen with recent earnings. I still like big cap tech over the medium and long term, but I agree over the very short term, if people are getting more defensive, more cautious into this election, that might be another casualty.
Well, Rebecca, really appreciate you sticking with us this morning. Great to speak to you again. Hope to do it again soon. That is Rebecca Patterson. Of course, she is Bridgewater Associates' former chief investment strategist. Now, just 4 minutes to go until the opening bell, the start of trading on CPI Day. We'll kick it off with State Street Head of Equity Research, Maria Waitman. That's coming up next. This is Bloomberg.
make sure that we're exposed to categories that continue to be relevant to consumers, that we're positioned in categories where we have a competitive right to win.
By strategically adding and shedding assets, General Mills has turned over about 20% of its net sales base in the last 6 years. It's dramatically expanded its pet food platform, starting with the purchase of Blue Buffalo pet products in 2018. That expansion dovetailed with a boom in demand.
Pet in the U.S., pet feeding and treating, is a $50 billion category. It's almost 5 times the size of a category like cereal.
Is this the future of the company? I mean, we so much associate General Mills with breakfast and cereals, human breakfast and human cereals. Are we now going to be thinking about General Mills much more as a pet food company?
I think you'll be thinking about General Mills as a food company where we treat all the members of the family like family.
The humanization of pets is actually the biggest driver of pet food and pet treating growth. It has derivatives in not only feeding, which is the core thing that most households where most of the dollars go against the pet, but treating. And then you start to branch out to things like vitamins and minerals and supplements.
People really love their pets. They want to take care of their pets like they do their family, and it really is a global phenomenon. That's why we recently entered the China market with Blue Buffalo. That's why we bought Edgar & Cooper recently in Europe, because we see the same kinds of trends that have played out here in the U.S. playing out all over the world.
We are just moments away from the start of trading. This is Bloomberg Open Interest. I'm Matt Miller. It's fascinating to me that after we get CPI data, the once all-important inflation data point, and the day after a presidential debate so important that markets are so calm. S&P futures are essentially unchanged going into that bell. NASDAQ futures up about 0.2%. Yes, we had some move, especially at the front end of the curve in terms of bond yields, but otherwise things seem relatively placid. Here at the New York Stock Exchange, of course, we are going to mark the 23rd anniversary of September 11th. Down at the NASDAQ, Tuesday's children, and they're going to do the same thing. Throughout this program, we have been and will continuing to be honoring those who lost their lives on that fateful day in 2001. Right now, let's get over to Katie Greifeld. She's going to give us a check in the early seconds of trading on the day averages. Katie?
Yeah, 36 seconds in. You can see, like you said, a bit of calm, but still mixed markets right now. The S&P 500, we had gotten back to unchanged. Now we're dipping a little bit as those bells ring. The NASDAQ 100 trying to hold on to gains here, currently up about 0.1%. Certainly not smooth sailing if you take a look over at the small caps, with the Russell 2000 currently down about 0.5%. If you look under the hood, of course, there is some trading happening around politics right now, and that's happening in Trump media and technology shares. Ticker DJT. Shares absolutely falling after the debate last night, currently down about 14% right now. And of course, Shanali, the stock has fallen about 60% since May.
More moving under the hood here, some earnings movers. GameStop under pressure despite reporting a surprise profit. Net sales missed estimates, and GameStop now down about 11.5% at the open. You also have Dave & Buster's soaring more than 11.7% higher after adjusted EPS and margin performance impressed. Remember, this was a stock that had a tough year, but things are starting to turn around a bit, Matt.
Also keep an eye on renewable energy and green energy stocks. They are moving higher after the debate last night. Kamala Harris has been, of course, a proponent of the Inflation Reduction Act, which Donald Trump says he wants to roll back entirely. But you do see, I think this is just one more indicator of Harris winning that debate. You know, obviously, different people are going to have different opinions. Right. CNN did a poll. 63% of those respondents said they thought Harris won the debate. You could say CNN, the people who they're polling are likely center left because, you know, they are.
It's interesting to see that pair trade going on in markets, of course, highlighting DJT's plummet, of course, highlighting the rally that you're seeing in the green energy stocks. Clearly, there's some movement there.
Trump did say that he likes solar, remember?
There you go.
He
That's
said
true.
it's horrible. He likes it.
A pair trade,
But,
nonetheless. Let's bring this conversation over to State Street Head of Equity Research, Maria Waitman, who's joining us now. And of course, we want to get to your big tech call, but let's start with the news of the day, because of course, we're all talking about the presidential debate last night. Then you get 8:30 a.m. the CPI data on a core basis coming in a little bit hotter on a monthly basis. Where are you taking your cues from right now?
Yeah, hello, and thank you for having me today. I mean, for us, by far, the most important indicator is that what's happening with economy, so economic activity, recession on, recession off, that seemed like to be front and center of our calls. I actually have to say that recent messages from the Fed were really supportive for equity market, equity investors. Chairman Powell and Jackson Hole told us that he's focused on labor market and he sees it as non-inflationary. So good news on economy, good for stocks. Bad news on economy, also not terrible. So I think that's kind of the broad medium-term setup for us, so fairly constructive.
When you look at the movement in the bond market at this juncture and the hopes kind of diminishing here for that 50 basis point cut in September, of course, there are many that still believe you might get more 50 basis point cuts in the rest of this year. Does that really change the calculus and how you're discounting equities right now, particularly the growth ones?
I mean, maybe not particularly. I mean, it's probably more important to think about kind of the cuts over the cycle, and their markets seem to be fairly kind of fairly constructive in terms of like, okay, we expect a fairly significant rate cutting cycle over like year and a half. So that's I guess probably more important than exact detail of like front loading or how many cuts and when. So I think it's overall kind of discounting cuts over cycle.
I mean, if we get cuts, do we not then see a broadening out of earnings that follows, Maria? And does that not mean you could rotate into, smaller cap names? Because obviously, the Mag 7 were taking all the air out of the room, but that really seems to have changed in terms of this earnings season and could continue.
I mean, that's obviously a million-dollar question. I think that's a question I get asked more often than any other question. When do we buy small caps? And I think you're right. For the rally to broaden, what you need to see is broadening out of earnings. And we haven't seen it yet. And if anything, all those recessionary concerns, they're weighing a lot more on small caps. So yes, small caps will potentially get some kind of relief from lower interest rate. But the reason Fed is cutting rates is that underlying economic pressure, and they really felt a lot stronger in small caps and their earnings expectations. So no, not yet. I think the first kind of small caps, you go for quality. That's an indication. Okay, we have a problem where earnings are scarce, where the earnings are more sustainable, where do we see quality, where do we see less margin pressure.
All right, Maria, thanks so much for joining us. Maria Waitman there, State Street Head of Equity Research, talking to us about markets on such an important day, not only because we got that inflation data out, and I guess that means maybe a little bit less than it did over the last couple of years, but we had this debate last night that I think most people stayed up and watched the whole debate. But more importantly, it is September 11th. It's been 23 years since terror attacks that killed thousands of Americans. And as a result, we are honoring those fallen at the New York Stock Exchange and at the NASDAQ market site. We're going to take a moment of silence right now in observance with those two marketplaces of the time when American Airlines Flight 77 struck the Pentagon. So we saw damage in New York, in Pennsylvania, and in Washington, D.C., across the country, and the whole world will never forget.
However, your siblings and parents will always make sure to share your stories for you. Through us, your family, will make sure you are never forgotten and your legacy will live on. Tito, wherever you are, I hope you finally found peace. Mahal na mahal kita.
I think one of the dirty little secrets of credit is that the businesses generally don't pay you back, right? The markets pay you back, M&A pays you back. So what is the most important thing is to always make sure that the borrower is worth more than the loan. And as long as the borrower is worth more than the loan, then it might be a rocky ride, but you're going to get your money back. And this world where there's these disruptive companies that have, let's call it 100, 200, 300 million of ARR, are looking to not raise equity capital because of the fact that they raised it in 2021 or 2022, and no one really wants a down round. But there's a lot of capacity in the capital structure to have, let's call it a structured solution. We think that there's a lot of opportunity with those businesses.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia Trade.
You're watching the close.
Welcome to Balance of Power.
This is Bloomberg. Welcome to the world of decentralized finance.
With the surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people.
This is a political attack, and we must hold our elected officials accountable.
The transactions.
Really a record-breaking moment.
Bitcoin is the exit strategy.
And the technology.
Awareness is going to grow, and these things grow the overall industry.
Crypto as an asset class is here to stay.
Bloomberg Crypto, only on Bloomberg.
This is Bloomberg Open Interest. Let's take a look at how stocks are faring. About 11 minutes into the trading day, you can see that slight gains have turned into losses. The S&P 500 currently down about 0.5%. You can see the NASDAQ 100 flat on the day, but we had been talking about gains earlier for big tech. No longer. And then you take a look at your small caps. That is your biggest loser right now. That's the state of play. The small cap index currently down about 0.7%. Let's turn now to our top calls, though. Some of the analyst action that's in focus this morning. And first up, Goldman Sachs says that Morgan Stanley is no longer a buy. Analysts at the firm are cutting their recommendation to neutral, saying that the bank has less recovery than peers in the investment banking divisions and cites risks to its earnings growth. Next up, you have Jefferies saying that Williams-Sonoma is a buy, raising its rating on the home goods retailer from hold. The analyst over there says the company is outperforming industry growth while also cutting back on promotions. And finally, Citi saying that Charter Communications no longer a sell, upgrading the telecom company to a neutral, raising its price target as well. The analyst says that the core operating environment in broadband, quote, seems stable, but you can see shares currently down about 0.6%, Matt.
All right, let's get back to last night's debate. Both candidates attacked each other over the economy, immigration, and their stances on energy. Here's some of the back and forth on fracking and clean energy.
I will not ban fracking. I have not banned fracking as Vice President of the United States, and in fact, I was the tie-breaking vote on the Inflation Reduction Act, which opened new leases for fracking.
Fracking? She's been against it for 12 years. If she won the election, the day after that election, they'll go back to destroying our country, and oil will be dead, fossil fuel will be dead, we'll go back to windmills, and we'll go back to solar, where they need a whole desert to get some energy to come out. You ever see a solar plant?
Well, he did follow that by saying he does also love solar. Joining us now is Bloomberg's David Gura in Philadelphia. David, it did seem like Kamala Harris had him on the back foot from the very start, and it was interesting, I think, that she said, I was behind fracking, I support fracking, I'm for Pennsylvanian fracking, and then he followed with a retort, she'll ban fracking on day one.
Yeah, I mean, she knew going into this debate this was going to be something that the former president was going to bring up here in the state of Pennsylvania. We had kind of a preview of that from statements that the former president had made. So she'd obviously prepared for that. And what she's emphasized over these last few weeks is that, maybe some of her policy positions have changed, but her values have not. And I think it was just an example, one of many during the course of this debate, where she was able to kind of artfully pivot on the one hand, but also get him to kind of pivot from what he wanted to be saying in that moment. This isn't what he wanted to be talking about. He could have doubled down more. He could have talked more about these inconsistencies in her plans since she ran back in 2019 and 2020. She kind of threw him off rather over the course of this on energy. I think of abortion as another issue here. I mean, he began that answer on abortion, on reproductive rights, by talking about how this should be left to the states. Okay, a fair answer and a thoughtful answer and perhaps a sound policy answer from the Republican side, but then that devolved into kind of conspiracy theories, so much so that the moderators of this debate interjected and said that there's no factual grounds to back up what the former president was saying. So you're right, there was a lot of baiting, a lot of needling that was proved quite effective over the course of the debate for Vice President Harris.
At the end of the day, you looked at the outcomes and the reactions, and the betting markets really swayed Harris in the immediate aftermath, but the betting markets are not the polling markets. And if you think about the polls itself and where it matters most for Harris, was there any indication, David, that anything she said would sway any of the voters that were so firmly voting for Trump already in those swing states?
So this is a debate, I think, that was largely centered on style more so than substance. And going into this debate, I think the vice president knew that it was incumbent on her to introduce herself to those voters who are still undecided. And we're talking about thousands of voters across this country, not a huge number of them, and not just in swing states, but in swing districts. So she's made that appeal, but I think back on what I heard from Governor Gavin Newsom of California before this debate. I said, what does she have to do tonight? How important is this debate? And he said, think of this more like World War I, where it's going to be decided by inches. We were not going to see a giant jump in the polls as a result of that, nor are we going to see somebody sink in the polls as a result of this debate as well. I mean, I think it's a success for her in that she stayed on message. She comported herself in a way where I think a lot of people would think that she's calm, collected, presidential, dare I say. That was what she needed to do, and I think, that is going to be effective in some sense, but is it going to be decisive? No. We've still got fewer than 60 days to go till the election. Both of these candidates are going to be on the campaign trail really making the case, again, to that very small sliver of the electorate, and nothing is going to change radically as a result of what happened here in Philadelphia last night.
Well, David, let's talk about one person who was apparently swayed by last night's debate, and I'm talking about Taylor Swift. And it's easy to make jokes here, of course, about her coming out on Instagram, posting a photo with her cat, throwing her support behind Kamala Harris and Tim Walz and signing it as a childless cat lady, of course, referencing J.D. Vance there. But you have plenty of political analysts saying that this could actually make a difference in the polls, in the voting box. I mean, how are people reacting to this on the ground in Philadelphia?
So there were two kind of signal moments in the aftermath of this debate. The first was when Donald Trump came into the spin room. That was unexpected, and I was in the middle of an interview with Senator Chris Murphy of Connecticut. He and I were talking, and then kind of over my shoulder, I saw just a pack of reporters running by, so they were there to see him. What preceded that, though, was when this endorsement came out on Instagram, and there was just kind of buzz within the spin room about people talking about it. Did you see this? Of course, Tim Walz, the running mate for Vice President Harris, was asked about it when he was on television in real time. It's something that a lot of people wondered about and thought about. You think back on the DNC, there was all this speculation. Would there be a surprise guest? Could that be Beyonce? Could it be Taylor Swift? I think what it highlights is the fact that the Trump campaign, the Trump-Vance campaign, is still being dogged by these remarks that J.D. Vance made when he was running for Senate in Ohio, chief among them this remark about childless cat ladies. It has taken on a life of its own, and I think you're right, Katie. I think that there's a lot of power in this endorsement in kind of a pop culture sense. We'll see how effective that is at sort of swaying people to come over to Vice President Harris's side. But again, it was a big moment. It was a surrogate from a surrogate who was not in the room last night, but I think had a profound impact on the conversation, the dialogue that was taking place in that room last night.
It did seem like the moderators were posing questions from Kamala Harris's camp, you know, talking about this Trump tax, the idea that his tariffs are actually a tax on consumers, and not really hitting her on her incredibly liberal voting record in Congress. What did people in the press room think about the sort of 3-on-1 aspect of the debate?
You know, it's certainly something that I heard from Republicans I talked to after the debate last night. Michael Whatley, who's the co-chair of the Republican National Committee, making a very similar point. He thought that there was a bit of unfairness there, particularly when it came to the fact-checking that was done in real time on occasion by those moderators as well. But you're right. I mean, there were moments during the course of the debate when they brought up that kind of difference in policy positions when she was running for president versus now, back in 2019 and 2020. But there wasn't a whole lot of emphasis on her voting record. So I think it's a fair point in the sense that it's going to be something that's going to be criticized by Republicans and certainly backers of the former president going forward here. But, you know, thinking about the fact-checking in particular, we wondered what it would be like with the microphone muting and all of that, the limitations on what the moderators were supposed to do. Again, I think there was just kind of a handful of moments when things that the former president said were so egregious that these moderators felt like they had to jump in and say something to set the record straight. Abortion is key to that moment in particular, immigration as well. And then the effectiveness of that mute button, I think that they were deploying it more, it seemed, on the vice president than they were on former President Trump. There were many moments over the course of the debate when he interjected and they went to him, he got a little more time for rebuttals.
I wonder, David, where does President Trump get this sort of post-birth execution, you know, lie that he continues to bring up? Because it's not the first time.
No, it's not the first time, and it's something that's been kind of in the zeitgeist of this kind of right-wing, fringe right-wing media. You've heard people talk on talk radio about it. You've seen it on X, on Twitter, and it's something that he has said before over and over again. And again, that was a moment when Lindsay Davis, the moderator from ABC News, said there is no evidence of that happening. There's no evidence of execution of newborns or abortions in the 9th month of pregnancy. So again, it's one of many things that he kind of seized on immigration. It had to do with pets in Springfield, Ohio, things that he's talked about at rallies, brought up kind of as asides, making their way onto this very important stage last night. And I think a lot of people kind of, especially supporters of him, wondering why that was something that he diverged into talking about when there were very, again, concrete policies he could have spoke about instead.
David, thank you so very much for joining us and for all of your coverage. Of course, that is Bloomberg's David Gura reporting from Philadelphia. And coming up, pessimism on Wall Street. JP Morgan echoes Goldman Sachs, guiding expectations downward. That and more on our Wall Street beat. This is Bloomberg.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers jobs day like Bloomberg. Bloomberg surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything. A lot's happening on Wall Street.
I couldn't have been more wrong.
It's going to stay volatile for a while longer.
It's a bifurcated market.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insight.
Year over year, you could start to see some cracks.
It might be overhyped short term, but it's underhyped long term.
From businesses most influential and instrumental.
A lot of the doom and gloom has been somewhat overblown.
If you're not living near the edge, you're taking up too much space.
Bloomberg Wall Street Week, only on Bloomberg TV and radio. Context changes everything.
This is Bloomberg Open Interest. Let's take a look at stocks right now because the S&P 500 at session lows, you can see, of course, down about 0.7% right now as we continue to digest what we learned at 8:30. Of course, inflation picking up a little bit on a core basis on a month-over-month measure that's weighing on stocks this morning. The small caps feeling it as well. The NASDAQ 100, your relative outperformer right now, still down 0.4%. And on the S&P 500 level, if you look at the sectors, you have almost every sector down right now, including the financials, Shonali, continuing to be under pressure.
Badly beaten, of course, every single stock in the KBW Financials Index currently down on the day. It's time now for the Wall Street Beat because it's day 3 at Barclays' Global Financial Services Conference in New York, and the forecast has been cloudy so far. Adding to the pessimism, Morgan Stanley was cut to neutral by Goldman analysts on the bank's investment banking outlook. Joining us for the latest on this is Sridhar Natarajan. I did want to start with this Morgan Stanley move because you have their new CEO, Ted Bick, saying that this is going to be an investment banking cycle really leading the way. You're not seeing it yet. And with the elections and with the weakness in private equity, you may not see it for months, will you?
Well, let's start off with the fact that no bank loves seeing a downgrade right after one of their top executives speaks at a conference. For Morgan Stanley to get a downgrade from Goldman Sachs, that hurts even more. But the point is, even as Dan Simkowitz, the co-president of Morgan Stanley, talked up the prospects of the bank longer term over the next 5-10 years, the immediate outlook isn't all that great, partly in line with what we should expect. But when he comes on stage and reinforces the point that even as deal-making conversations are picking up, you're not going to see that play through in the revenue line, that does give people some reason for pause. And in a year when bank stocks have done well, that does affect the broader index overall. Unfortunately, it hurts Morgan Stanley more than others because they have been the weakest big bank stock all year. They're only up about 2% in 2024 so far.
It's better, or is it better, to get a downgrade from someone else than to downgrade yourself, as we saw yesterday, JP Morgan?
Well, you can probably play that off as, see, we're fair sports. But when it comes to arch rivals, probably not. So I'll say a self-downgrade is better than a rival downgrade.
Well handled.
Shri, thanks so much for joining us. Shri Natarajan there talking to us about Morgan Stanley getting downgraded. And of course, yesterday, JP Morgan, President Pinto came out and warned that we were a little too optimistic there and the stock cratered down more than 5%. Coming up in the next hour, we're going to talk the economy and debate with Omer Sharif, then Henrietta Trey's on politics as well before an interview capping it all off with Howard Lutnick. Oh, and we also have Henrik Lundqvist.
Stick around for that.
This is Bloomberg.
2015, I was not optimistic because nobody was working on the hard problems. The energy R&D budgets had gone down. The venture investing in climate had gone down. It was completely out of fashion. So I don't know what people were optimistic about then. The fact is we built essentially from scratch, you know, with lots of supporters, a really mind-blowing level of innovation against emissions. And, you know, in the last 9 years, that's gone better than I would have expected. So only now could you even, you know, plausibly be optimistic about the path of emissions. And someone who said, hey, nobody's ever scaled things up very like the speed that we knew to before, they're welcome to say, hey, I'll believe this when I see it. You know, in the meantime, some people who care about this issue are really out, you know, trying to think, do we need permitting reform? You know, do we find, what new ideas haven't we found yet? You know, how do we fund people with those new ideas? How do we get the costs of these things down? How do we collaborate on a global basis? So we're still not at the point where it's guaranteed or even that it'll be easy, but at least there's a theory of change.
Middle East and Africa, vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Get your fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything.
Good Wednesday morning from the Bloomberg Interactive Broker Studio in New York City. This is the Bloomberg Intelligence Radio program. Alex Steele, Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio. We're also streaming live on YouTube, so you can head over to youtube.com and search Bloomberg Podcast. We're also in your dashboard, Apple CarPlay, and you can get us pretty much there as well. Alex, it's been a heck of a morning. We've got some red on the screen. We got some inflation data coming out here today. We've also been observing the remembrance of 9/11, so it's been a busy morning so far.
Yep, and that's also recapping yesterday's debate as well and the ramifications of that. And as you and Tom are just hitting on, it is lovely, though, to see world leaders from both sides on the same row at the 9/11 memorial. That really helps on a day like today. We are going to be bringing you some moments of silence throughout the next hour as well. Plus, we will also be speaking with, or we'll bring you an interview with Cantor Fitzgerald's CEO, Howard Lutnick. Looking forward to that.
What did you make of the inflation print the CPI did?
I mean, I kind of agree with you. It was mad, right?
Yeah.
It was definitely mad, but also I wonder, does this push the 50 basis point cuts to November and December, or does it take a 50 off the table?
Right.
I don't know if we know that yet. We're a little less than 50 priced in for the December meeting, but I have to wonder if we're going to be looking at that now. And the question still is, what is neutral? So how do you even know what the rate path looks like if we don't know what the end game is?
Yeah, and we were speaking with Jeffrey Cleveland from Payton Regal earlier, and he felt pretty strongly that this inflation print, the core, which came in just a little bit higher than expected, that's probably enough for the Fed to just go 25 basis points and not 50. And I think that's maybe a little bit what we're seeing in the marketplace right here. We have the S&P off 0.8%, the Dow off 1.2%, and NASDAQ off just a little bit less, off 0.1%. And we're seeing in the yield market 10-year treasuries are pretty steady here at 3.63%.
Which gives the ideas is good news for the economy, now bad news for the equity market. Like, are we back on that track with the tech, the only part really outperforming? Also the curve, the 210 spread, very close to inverting sort of yet again. So that 6 basis point disinversion, relatively short-lived on that front. And then the question becomes, Paul, what is the next catalyst for the market, if not just September 18th, a week from today?
Yeah, exactly. So we will certainly pay attention to that. We'll have some smart voices coming up here in the next couple of hours to give us a sense of kind of where this market could go. We've been honoring the remembrances, observing the moments of silence in Lower Manhattan
at the Pentagon in Washington, D.C. All morning. Coming up, we're going to observe a moment of silence, 10:03, when hijacked Flight 193 crashed into Shanksville, Pennsylvania. We'll observe a moment of silence.
Marion R. Britton. Thomas E. Burnett, Jr.
All right, that was a moment of silence for the victims of Flight 93 as it crashed into Shanksville, Pennsylvania. Again, Shanksville, Pennsylvania, Lower Manhattan, the Pentagon. Many parts of this country were impacted by the events of 9/11, and we take the time to remember that today on what is another beautiful September 11th morning here in Midtown in Manhattan. It just reminds you of that day, which is a similar day when the weather was absolutely perfect, late summer, early fall day here in the Northeast United States. So we like to remember that on this day. Let's get back to the markets right now. We do have some selling in the marketplace. We have the S&P off 0.8%, then Dow off 1.3%. Let's check in with Nora Melinda and get a sense of what's happening underneath the hood there with these markets. Nora Melinda, Bloomberg Equities reporter, joining us here in our studio. Nora, what are you looking at?
Well, I mean, I'm keeping an eye on all of the fallout after last night's debate. I mean, my team has really been watching Trump Media and Technology Group. That's ticker DJT. And we're seeing shares lower, tumbling as much as 18% in trading this morning after it seems as though current Vice President Kamala Harris seems to have pulled a bit of a lead last night after watching the debate. I was up late. I honestly wish they'd started it a lot earlier.
So
did it start? Did you fall asleep?
I did.
I mean, understandably so, because the headlines were going
to. That's, I mean, it's bedtime tonight. It's 9 o'clock.
I said 9 p.m. We're starting now.
Exactly.
It was, I feel like, until after 11 p.m. But I try to stay awake, but all this to be said, we are seeing a bit of a fallout in the ripple effect of that debate. We're seeing crypto stocks, they're falling. We're seeing Bitcoin lowered. Of course, we know that to be the largest cryptocurrency. And we're watching a few other names. Of course, private prison stocks are also in focus. If you're looking at Geo Group and Core Civic, we know immigration is definitely a very major concern and a campaign issue in this election. And companies like Geo Group run a lot of immigration detention facilities. And so we're just really seeing a broader sell-off when it comes to anything kind of related to the Trump trade right now.
Yeah. What's also interesting, my daughter made it longer than you did, by the way. She's made it till 10.
Did she? Well,
I don't know if she's been paying attention
Springer.
that much, but still. Okay, also what I find interesting here is that lithium stocks are moving. I mean, unrelated to like anything political, but why?
Separate.
What's the why here?
Yeah, so this is, we're seeing lithium stocks higher, and this is after UBS said that the Chinese battery giant Contemporary Amperex Technology, that's ticker CATL, it's pulling back its production in the Jiangxi operation area. And so we're seeing a lot of lithium-related stocks that are gaining off of this, this move.
Yeah, and quite a move, interestingly enough. Okay, so that's the broader take. Those are the individual stock moves. Now, what do you do? Market Drivers brought to you by IBKR with Interactive Brokers Forecast Trader. You can trade your views on key economic, IBKR.com/forecast, and get started today. So we got through the risk events. We got through the debate. We got through CPI. We're headed towards the Fed. It looks like markets are now pricing in that 25 basis points in September. So what do you do in that scenario? Nicole Webb is Senior Vice President, Financial Advisor at Wealth Enhancement Group, and she joins us now. Nicole, does this take 50 off the table, or does it push the 50 out to like a November or a December?
You know, we were of the camp that the Fed probably wasn't going to step into this cutting cycle with 50 basis point cut. And so for us, the CPI today was largely in line with expectations, obviously across the board. And for us, it just didn't bear terribly much weight in the short term.
So what are the key drivers here, then, do you think, of these markets going forward? Again, as Alex was just mentioning, we've gotten through a number of kind of external events here. What do you look to be kind of a driver for markets going forward?
Yeah, Paul, I think, you know, the market response over the last couple weeks has really been, and I would say even maybe this is some of what you're seeing this morning after the CPI, which, as I just mentioned, was largely in line, but it's this need for all of the fundamentals to hold up in support of equities. And so when you think of part of that being the disinflation story, part of that being the release of the pressure valve on the consumer, and then also you layer in the need for policy to go the right direction, corporate earnings, to continue to perform, it really just puts a lot of weight on the market where you have valuations high, consensus long equity, and then you also have a cooling economy, not just here, but also globally. And so it's just going to be a lot of digestion we expect over the next couple of weeks, if not months.
Yeah, talking about globally, I was talking to an oil trader today, and he was at a conference over in Singapore. Yeah, I know, it's a shocker. And he was saying that everyone used to think that China was just going to be a property issue, and now everyone, even the Chinese, are like, oh, no, this is a real broader economic problem in China, just to talk about the weaknesses there. So what's the playbook, Nicole?
Yeah, I think when you have a market that's digesting, to your point, Alex, the why, it begs the question, why are we slowing? And then does it change? And China's not a quick reversal, so that likely isn't changing in the short term. And we know that they're greater than 15% of global GDP. That has a big ripple effect. And then you think of the restrictive policy landscape in the US, even a normalization of rates, to your point about not knowing exactly what that neutral rate is, it's going to take some time. And then you have excess savings declining. And so the last leg of that then being my fourth point, which is all doesn't sound overly optimistic, but you have the deceleration of earnings from the mega technology companies as they continue to increase that cap spend. And so when you think then about where we're going to invest money, still under this long bull thesis, we really are looking for places where you can expect earnings acceleration forward looking, where it's an environment that isn't necessarily in demand of global growth accelerating, but instead, if we normalize or we're okay with on trend, what are those pockets? And so you're already hearing this a lot, that healthcare pocket, utilities pocket, the REIT pocket, all of that bodes favorably in the forward-looking landscape over the next 6 months.
Yesterday we had some big moves into the downside for some banking stocks led by JP Morgan, and JP Morgan's weak again today. So I guess calling into question a lot of industry leaders at a recent conference about the profitability for the upcoming quarter for the banks. How do you think about the financials as a whole here?
Yeah, I think first when we think about the banks, we have to remember that it was only a couple of weeks ago that we were at fresh 52-week high on bank stocks. And so that in and of itself, again, going back to kind of where we are from a valuation and consensus perspective, the conversation around NII, it's expected to deteriorate. So the response there to some of the comments yesterday was, again, kind of to be expected and perhaps shouldn't have been new news. And then again, curiosity around, even though we were talking about delinquencies, there has been a consistent flatlining to delinquencies. We're not seeing an acceleration in growth in delinquency. And so, again, I think this goes back to where I kicked things off today, which is that we need a lot of fundamentals to stay in support of equities, and anything that looks like it's a deterioration of any of those fundamentals when you do have valuations as high as they are is going to put pressure both on sectors and on the index as a whole.
Decline. Yep. That speed of that decline was really confusing. Like we knew it was going to be happening with rates, which was just so odd. Tech last 2 days has been the quote unquote outperformer. That's safety trade, if I can say that, right? You had the bid into bonds yesterday. You had the dollar moving higher as well, and you had that bid into tech. Is tech going to be that safety rotation trade?
It's hard when you see pullbacks in the tech area where, we've been talking now for a few weeks that they were no longer the leader for calendar year 2024. That does look like an opportunity to be a buyer in that space. Yes, we don't know in the short term what that return on invested capital is or how quickly we start to see those earnings surprises to the upside on that investment made. But if you have a long thesis, if you are a long-term investor, not a trader, these pullbacks do look like a time to deploy fresh money into that sector.
Fixed income here, we've had yields pull in pretty dramatically. Just on the 10-year, we've gone from 5% to now today around 3.6% here. What are you doing in fixed income space? Are you taking credit risk?
Yeah, when it comes to fixed income, I think probably the thing that we have spent the most time on recently is just are you almost better off on a 1 year staying in a money market? So if you don't believe there's going to be an acceleration to cooling and that the Fed doesn't necessarily have to go into a rate cutting cycle as we think of it traditionally, but more into kind of this shaving rates down as we normalize the interest rate environment on a 12-month forward, could you actually outperform a 1 year treasury sitting in a money market? And so there's kind of some of this playing around, but fixed income we do think is going to continue to be a really valuable part of the portfolio. And we also expect to see a lot of flows into that sector. When you think just about where the concentration of wealth is in this country and the ages, it seems like a period in time in which you're going to see flows start to move away from some of that shorter duration investment into some of these longer, including credit exposure areas of fixed income. And so from a flows perspective also, we think that will be favorable.
It's interesting, Paul. JP Morgan talked about how you won't see the money move from money market funds until the Fed starts cutting more aggressively, like until they're deeper into the rate cutting cycle. So we're all like waiting for that rush. We might have to wait a little bit until that happens. For you, what's the next catalyst? Is it just going to be the Fed meeting, or is there something else that you're looking at?
Yeah, I mean, to us, the first catalyst, Alex, to your point, would be, post-Fed meeting and is the dot plot. So what do we see, from members in terms of the trajectory of the rate cutting cycle we're entering? So if it is our first cut, what does that look like, on the next 12 months? And I think even more importantly is how the Fed speaks about the economy following the meeting. And what I mean by that is there's so much weight right now on, is it 25, is it 50, is the second cut 50 basis points? And a lot of that has to come from how they talk about the setup of the economy beneath these cuts. And I think there will be a big fear response if, they aggressively start cutting, which really does signal that we are far too restrictive and the economy requires stimulation versus we're on a trajectory of normalization. And so, that piece of it. And then the response from the housing sector in accordance to how the cuts go. We know we're undersupply in housing. That's a huge catalyst for expansion in the markets if we do start to see a drive towards equilibrium in supply versus ongoing demand for housing. And so those two things have a pretty high correlation, we expect, and will handle the sentiment of investors as we enter the end of the year.
Very good. Nicole Webb, thank you so much for joining us. Nicole Webb, Senior Vice President, Financial Advisor with Wealth Enhancement Group, joining us from New York via Zoom here. Alex, the markets are rolling over a little bit here. The S&P accelerating its decline here, off about 1.3%. The Dow off 650 points. That's 1.6%. And even the NASDAQ, that's off about 130 points, or 0.8%. So people concerned that, the faster than anticipated core inflation, maybe the Fed won't maybe be a little more gradual in cutting rates here, as opposed to maybe getting that 50 basis point move here in September in just a couple of weeks. And then there's a Bloomberg News reporting, Alexander Semenova's, that was a note saying Morgan Stanley's Mike Wilson says the AI theme is, quote, overcooked.
Doesn't mean it's over, he said, but it is overcooked. You're bearing the lead for yourself. U.S. mortgage rates slid last week to the lowest level since February of 2023. So if we're at 6.29, you can get a little lower. I'm assuming your credit's good.
Yeah.
Are we getting close to the refi? No. Okay.
I was gonna wait for a 4 handle, but I'm not gonna be greedy. It's gonna be a low 5s. So I'll have to see.
Oh, so you got a long way.
I got a long way.
So this might not be till next year. You might see some significant rate cuts on that end.
Yes, exactly. But we got the 2-year Treasury. I mean, it's kind of stayed here, 3.59%. We were, remember, back at 5% just 18 months ago. So yields coming down pretty exceptionally here. But the CPI report, that core 0.3, the consensus was 0.2, spooking people a little bit. Maybe just taking that 50 basis point cut option off the table for the Federal Reserve September 18th.
And also, we can't underestimate sort of bank stocks continuing to roll over. It's not just JP Morgan down for a second day, down by 1%. Goldman is also off by about 1.6% as well. And even tech is now trying to catch up to the downside, as Paul was just mentioning, flipping to the negative territory, down by about 0.5%. But that S&P Financial Index, definitely the biggest loser coming up on that point.
At the bottom of the hour, 10:34, Wall Street time, we're going to have a simulcast with Bloomberg Television. Cantor Fitzgerald CEO Howard Lutnick will be speaking with Shonali Bassett, Katie Greifeld, and Matt Miller from Bloomberg, so that'll be good. September 11th is a very difficult day for the good folks at Cantor Fitzgerald. They lost 658 of their employees on 9/11, so it's always been an important day for our good friends at Cantor Fitzgerald. We'll have more coming up. This is
headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker, the Bloomberg Newsroom, with this Bloomberg Business Flash. Swaps traders fully pricing in a 25 basis point cut at next week's gathering for the Fed. They see only a small chance now of a half-point reduction. Well, this comes after the core consumer price index, which strips out food and energy, increased 0.3% from July. That's actually the most in 4 months. So as a result of that, stocks are lower. The S&P 500, 74 points lower, down 1.4%. The Dow, 693 points lower, down 1.7%. The NASDAQ 100 right now, 191 points lower. That is down a full 1%. All 11 major industry groups in the S&P 500 lower. Energy, the biggest drag. Among the most active shares of NVIDIA, CEO is going to be at a Goldman Sachs event today. May give an update on their new Blackwell chip. Shares of NVIDIA up 0.7%. We check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Paul and Alex.
All right. Thanks so much, John Tucker. I'm assuming you didn't stay up for the debate either, right? Because your bedtime's like 6 p.m.
Well, since my alarm clock went off at 1:50 a.m.,
Maybe not so much.
I figured it was not a good idea.
That is probably definitely true. I'm Alex Steele alongside Paul Sweeney and John Tucker. This is Bloomberg Intelligence Radio, bringing you all the top news in business, economics, finance, and politics from our headquarters right here in Midtown Manhattan. One person that did stay up to watch the debate along with me was David Gura of Bloomberg Intelligence. He's also the host of the Big Take podcast. David, both sides lost no time on getting their spin out there. The day two spin, the takeaways from the middle. What have you heard?
You know, this is an election that's going to be settled on a very razor-thin margin. That's what I heard from a lot of folks I spoke with yesterday, and I talked to Governor Gavin Newsom of California going into the debate about sort of what the impact of it might be on polling, on the campaign, and he said, think of it like World War I. You're going to measure a victory here in inches. A good run in this debate last night wasn't going to lead to a huge surge in the polls. Conversely, a bad performance was going to lead to somebody sinking really deeply as well. So this is going to continue to be really hard fought, and sort of looking ahead, as you say, both of these candidates are going to be on the campaign trail again pretty quickly. Donald Trump going out west to campaign in Nevada and Arizona, do a press conference at the end of the week in California. Vice President Harris going to North Carolina tomorrow, and then back up here to Pennsylvania on Friday. I guess the interesting thing to follow now is, will there be another debate between these two candidates? It's something that I talked about with the chair of the Republican National Committee yesterday, Michael Whatley. He's in favor of that. We heard kind of a mixed reaction from Donald Trump himself this morning. He said he was disinclined to have another debate. Certainly after what happened last night, Vice President Harris and her camp very enthusiastic about the prospect of there being another meeting of these two candidates on a stage somewhere before Election Day.
David, one of the reasons last night's debate was important for Kamala Harris is because we haven't heard a whole lot from her. She does not talk to the press nearly as much as some people would like. Is there any reason to believe that will change going forward?
It could, but I seriously doubt it. And that's a talking point that we've heard from former President Trump an awful lot. And going into this debate, it was telegraphed that's something he was going to really seize on. He didn't. It was one of those talking points he kind of shied away from or strayed away from over the course of this debate. But I mentioned he's going out to California to do that press conference. The thinking is from the Trump campaign that by doing those events, by having fairly regular press conferences, talking to reporters, doing interviews on sidelines, he is differentiating himself from Vice President Harris. We saw her do that one interview with her running mate and CNN now a couple of weeks ago. You know, that conversation continues somewhat. There are a lot of reporters who would love to sit down with her, but she has run a very effective campaign by not doing that thus far, introducing herself to the American public through big events. She's getting a big attendance at the rallies that she's holding, and there's just been an incredible amount of spending by the Harris-Walz campaign on advertisements, digital and television advertisements, north of $300 million between Labor Day and Election Day. So they are finding other ways to get their message out. We'll see if their approach to the media changes as a result of what happened here last night.
Hey, David, what's the take on how ABC did?
Oh, David? Do we hear that?
Can you hear me?
Yeah, I think we lost David Gurner. Okay, we'll
I think he just didn't like the question.
Yeah, I was like, or he just didn't want to answer the question.
He's smart. It's not his first go around. David Gurner, down in Philadelphia, the site of last night's debate here. So looking at this market's kind of still pretty...
We're really rolling over here, actually.
Yeah, meaningful sell-off here. The S&P off 72 points. That's 1.3%. The Dow taking on the chin off about 690 points. That's 1.7% here. The NASDAQ doing a little bit better on a relative basis, off 130 points, and that's about 0.7%. So again, maybe taking that 50 basis point cut off the table.
I was just talking to somebody on the strategist desk over at Goldman, and it looks like it's more, if you look at at the intraday chart of the S&P futures, the minis, the selling really started around like 9:27. So that's when the futures market closes and the cash market opens at 9:30. And then the heavy selling after that, which is typically a sign of fund selling, like the CTAs, volatility controlled fund, like risk parity funds, like the funds that have to rebalance based on some kind of technicals, they can't really sell in the futures market. So that could be why we're really picking up some steam there, because the technicals just look truly, truly horrible.
Yeah, they do. So we'll keep an eye on those markets here. Our last moment of remembrance this morning of silence is back in Lower Manhattan. 10:28 a.m. is when the North Tower of the World Trade Center fell. Let us return back
Uncle
to Lower
John,
Manhattan.
while I do not remember the 9 months I had with you, your accomplishments and personality have always been a constant in my life. When I see Boy Scouts, Marines, police officers...
All right, that was a moment of silence from Lower Manhattan, the site of the World Trade Centers. 10:28 a.m. Wall Street time, remembering when the North Tower fell. And I'm just seeing some beautiful images of the 9/11 museum, the 9/11 remembrance site, the reflecting pools on the two sites, the footprints where the two towers stood. Absolutely spectacular what they did in Lower Manhattan in terms of the museum. And those reflecting pools, the grounds around it, you can sit there and spend hours just walking around and reflecting, going into the museum. They just did a wonderful job.
Yeah, they really did. And it really helps as someone who has a daughter who's 10, who has like no understanding of what this means, to be able to go and articulate what that is and to look at the size and the space and the scale is also quite important for that. Continuing to look at this market here, we're looking at the S&P now down, really rolling over ever since the cash open. Let's bring you a business flash now with John Tucker and take a look at some of the individual names that we're looking at. John?
All right, the overall theme, Alex, traders seem to be backing off the jumbo rate cut this month for the Fed after the data that we got this morning. So it's probably, I'm guessing, the big cause for the sell-off today. The core consumer price index rising 0.3%. That was just a little more than expected. J.P. Morgan Asset Management Chief Global Strategist David Kelly now expects just a 25 basis rate cut following this report.
The Fed must be aware that if they go aggressive here, they're in danger of undermining consumer confidence. And honestly, the economy is doing exactly what they wanted to do. It is settling into a softer expansion, a slower expansion. That's what they want. So they only have to gradually return to normal on interest rates.
And the consumer price index result represents, this is the final piece of economic data ahead of the Fed meeting, which is next week. And among the most actively traded shares of NVIDIA, one of the few standouts today, it is higher, up 0.8%. The CEO, speaking at a Goldman Sachs event today, he's actually going to be interviewed by David Solomon, the CEO of Goldman Sachs. Investors, of course, will be listening for any update on its Blackwell chip. And after the debate, it shares of Trump media and technology among the most active, and they are lower. Right now, they are down 16%, and this comes just as the lockup period from its blank check deal, that's about to expire September 19th, and that would flood the market with even more shares. West Texas Intermediate crude rebounding some after plummeting as much as 5% in the previous session. Crude oil has tumbled by almost a fifth so far just this quarter. And as we look at commodity prices right now, a NYMEX crude 66.04 a barrel. That is actually up today, up 29 cents. And fundamentals do matter, apparently. GameStop sliding after the video game retailer reported second quarter net sales that disappointed. The results may demonstrate the ongoing challenges to the company's retail business model. GameStop shares right now down 17.5%. And finally, McDonald's inching closer to a future where human cashiers like Paul are not necessary. The world's largest burger chain.
Oh, he wants to be the Walmart greeter, just to point out.
Yes, but I was the French fry guy.
Oh, you were that's right, for 2 days. Sorry, I forgot those 48 hours.
So they're rolling out a new format in the U.S., digital ordering stations that take cash. So no more kids taking your order. At least, you know, that's the plan initially. Right now, the S&P 500.
Where do you learn to do cool stuff? Where do you learn to be a person and do things?
Interact with customers who want to know where their order is. I could just imagine Paul yelling at the people.
Yes, exactly.
I've interrupted you for the last time. Go ahead.
S&P 500 again down 82 points, a decline of 1.5% at 5413. The Dow Jones Industrial Average right now 40,000 mark right now, down 737 points. Down 1.8%. The NASDAQ 100, the tech-heavy NASDAQ 100, down 223 points. That's a decline of 1.2%. And that is your Bloomberg Business Flash. Paul and Alex.
All right, JT, thank you very much. Alex Steele here alongside Paul Sweeney. And just a little bit on crude there. We have a hurricane barreling towards Louisiana and a tanker burning the Red Sea, and oil is not barely up. That is something. That is definitely something to consider. We are just moments away from Cantor Fitzgerald interview with Howard Lutnick, as well as Shelley Bassett, Katie Greifeld, and Matt Miller. On September 11th, 2001, Cantor Fitzgerald lost 658 employees in the attacks, and since then, the company began the Cantor Fitzgerald Relief Fund. It's a non-for-profit charity focused on giving financial support to families affected by natural disasters, terrorism, and other emergencies. To commemorate the day, more than a dozen celebrities, including athletes, actors, rappers, and singers, will be on the Cantor Fitzgerald trading floor calling clients in an effort to raise money for their own charities. So let's go right to that interview now with Cantor Fitzgerald CEO Howard Lutnick, with Shelley Bassett, Katie Greifeld, and Matt Miller.
And we welcome now our Bloomberg television and radio audiences, because joining us now is Howard Lutnick, who is the chairman and CEO of Cantor Fitzgerald and BGC Group. Cantor Fitzgerald lost 658 employees in the 9/11 attack and another 61 people at an affiliate, Euro Brokers. Howard lost his brother, Gary, in the North Tower. Gary was only 36 years old. He also lost his best friend, Doug, at 39. This is a heavy day for you, Howard. 23 years later, how do you honor them today?
So today, all of our employees waive their day's pay, and we ask our clients to do as much business as they possibly can, and this is our charity day. So all around you, everywhere around me, are people donating every penny they make today to charities. We're going to raise about $12 million, and we're going to give it to 150 different charities around the world, because with these 5,000 people helping me, we're going to turn something horrible into something beautiful today.
I want to talk more about the legacy here, because one of Cantor's lawyers published an op-ed in the Wall Street Journal overnight about how retirements at Cantor Fitzgerald are rare, given the firm had lost so many employees. And there are just so many employees now entering the workforce as well, Howard, who were not even born at the time of 9/11. How, in some ways, are you still building Cantor forward with that memory of 9/11 as such a big part of that Cantor story?
So, you know, these families are a part of us, and they stay a part of us. So we have a job offer out to all of the children of the people we lost. So just this week, we have a young lady joining us who worked for, who was born, basically her mother was pregnant right at 9/11, and now she's graduating college, and she's joining us. So we have about 36 children who work for us now, but we've had hundreds come, and it's been 23 years, so they move on with their careers. We train them, and we help them flourish in life. So these families are a part of us, and they are part of our DNA, and it's amazing and uplifting today. So at 4:30 today, we'll have a memorial. and we'll get together with all their families and we'll read their names and put their pictures up. But we are together with these families, and the firm is together with them, and all these people. Remember, we raised $180 million to take care of the families. And the way we did that is our employees waived 25% of their compensation and gave it to these families. So you know who has the best employees? I have at BGC, GFI, and Cantor Fitzgerald. I have the best employees.
Well, it's certainly an important moment in history, in American history, for you and for Cantor personally, so we appreciate you being here. But of course, it's also a big moment for the country, in our political history as well. And of course, you're in Lower Manhattan, and you're recently surrounded by former presidents, the current president, and of course, some presidential hopefuls there. So Howard, I'll ask you, what did you make of the debate last night between Donald Trump and Kamala Harris?
Well, before, this morning I went to the memorial for the reading of the names, and it was the most respectful thing. You had Kamala Harris, you had President Joe Biden, then you had Mike Bloomberg in the middle, and then you had Donald Trump and J.D. Vance, all there showing tremendous respect to the events of September 11th. You've got to understand that we've got to take out terrorism and we've got to take out jihad. It has to end. It's got to be important to these people. And, I like that Donald Trump says he's going to return the hostages and take it to Hamas. I would like to hear Kamala Harris say the same thing. We've got to get the hostages out. We've got to crush Hamas, and we've got to crush jihad. We know jihad. We lost 658 people from Cantor. We lost 61 people from Eurobrokers. We've got to end jihad. Everyone in the United States knows it. Today's the day we remember it. It's got to end. We've got to end it on the earth.
I'll take then this opportunity to ask you, Howard, how you thought President Trump did in the debate last night. Of course, you have been named as one of the co-chairs of his transition team, were he to win. What did you think of his performance against Kamala Harris?
Well, look, I think Kamala Harris outperformed her expectations. I think she did a nice job. But Donald Trump, he hit every point. I mean, he hit every point. He stayed on immigration, which is unbelievable. I mean, why is the southern border open? He had it closed. Why, on the first day, did Joe Biden, with an executive order, open back up the border? I just don't understand why they would let all these people in, right? Inflation is huge and at an incredible high. So that first question, which is, are Americans better off? Kamala Harris told us a story about her upbringing because she didn't want to talk about the fact that prices for your groceries were up 50%. Gas is up 100%. The Inflation Reduction Act was really the Inflation Explosion Act. And so I think there were a lot of points to make. You can't make them all. I think he made a lot of them. And this is an incredible race. It's important for America, and I thought the debate was really important. If they have another one, I think that will be really important too. It'd be nice if the moderators didn't get involved in the debate and make comments only against Donald Trump. That would have been better. But look, you can't help it. It is what it is. But I think it's great when they talk. I wish Kamala Harris would give press conferences and answer questions and show the country who she is. That would be really helpful and really important for the country.
Howard, you came out of the debate yesterday and you had betting markets swing very much in Kamala Harris's favor. And then on the other hand, you had Trump say that he's not inclined to head into another debate with Harris. Now, you, of course, are very close to Trump, have been a very prominent fundraiser. Do you think he should be leaning into a round two for a debate?
Well, the thing about Donald Trump is he knows his debate. If you think about me, I have maybe 100,000 followers, and he has 100 million followers. So I think I go with what he thinks. But look, I thought it's important for people to hear what she has to say. So to hear her out and to have her be out there and stop hiding in the basement and sort of get out there and talk. I think Donald Trump's got a lot to say. He's got a big plan. He's got a program, and he's got his record of 3% growth, 3% GDP growth, 3% wage growth, and under 2% inflation. So, I mean, he had a great record as president. But as I said, I'd like to hear her give press conferences. I'd like to hear her just answer questions in an open forum. How can you run and be president of the United States without answering questions in an open forum? It just doesn't make sense to me. But I think it's an amazing race. I think we have Now, it's exciting, and we all watched the debate last night. We all have our opinions, but obviously, I love when Donald Trump debates. I'd be happy if he did it again, but he knows better, and he understands, and, I'm on his side.
Howard, because you've been on his side, especially as a prominent donor as well, what does fundraising look like from here? It's really interesting to see the way that both corporate America and Wall Street has been shaping up against these two candidates. You have the Walton family members throwing a fundraiser for Harris in the near future. How do you counter that?
Well, I think, look, Donald Trump is fundraising. Kamala Harris is fundraising. I think, the television airwaves are going to be incredibly crowded with advertising from both sides. And I think I don't think Donald Trump is having any trouble raising money. I don't think Kamala Harris is having any trouble raising money. So we can look forward to an enormous season of ads on television. But I think it's important to hear what the candidates have to say. The more they speak in their own voice, the better it is for America. As I said, Donald Trump is fearless. He went on ABC, which obviously was going to be against him because he's a fearless leader. I would like to see Kamala Harris show fearless strength and backbone and get out there and talk. I think if she got out there and talked, I think it would be great for America to hear her talk. How do you run for president and not get out there and talk? So I think the world should encourage her to get out there and talk, because I know Donald Trump is willing to take all takers, answer all questions, and get out there. And I think that's just basic.
And Howard, I'd like to talk about you a little bit, actually, and your role in, of course, the campaign, because last month you were named as co-chair of Donald Trump's transition team, should he win a second term, co-chair alongside Linda McMahon. How is that going? What are you focusing on right now?
Well, sort of the way transition works is if he doesn't win, then, it's not much. So what the campaign is focused on is winning, and I'll be focused on helping make sure that if he wins, there's an extraordinary administration around him. The scale of people who want to serve and are willing to serve far, far exceeds anything from 2016 and 2020, because now it's just a political race. That's all it is. Some people, more and more people come up to me and say they're supporting Donald Trump than ever before in my life. So I think the answer is you're going to see, if Donald Trump is elected, you're going to see the greatest group of administration and the greatest group of leaders enter this government. And I'm just helping him every way I can. But the key is he's got to win.
Yeah.
Transition isn't interesting unless he wins.
Totally get that's step one, of course, win. But are you talking to potential members of cabinet, for example? And if you want to name any names, we're all ears.
No, I'm not look, of course I'm talking to everybody. Of course we're going to do vetting. I mean, that is the job of running transition, is really to build a mosaic of incredible and capable leaders, both who've served in the government before and who hope to serve this time, and really set that all up so when he's won, then he can come in and take a look and build a great government. My job is to build a mosaic, and then he will be, of course, the commander-in-chief, and the chief is, let's design and build the government that is the strongest it possibly can. I think it's incredible that I get to play this role for him. It is the most exciting and most fun. I mean, I'm having a great time of it because I'm just helping him in a deep, respectful way, and it's going to be an amazing administration, but he's got to win first.
Are you worried, Howard, that if he loses, it'll be, as he's said on social media, a bloodbath? I mean, he said yesterday he had nothing to do with January 6th, but he clearly was encouraging all of his supporters to come and then go to the Capitol. His praise for Viktor Orban, his love of these big political rallies. Doesn't it concern you that
you gotta stop. This
does it not concern you?
You know he said there'll be a bloodbath in the auto industry if they keep the NAFTA deal working and they let China build cars in Mexico and import them. You know that's what he said. So this concept, and the other concept that really made me unhappy was when Kamala Harris said that January 6th was the worst thing that happened to the country since the Civil War. See, today is 9/11.
I think the worst attack on the Capitol is what she said.
Was different.
The worst attack on the Capitol.
Well, how about the Pentagon? The Pentagon was a worse attack on the Capitol. So, I mean, come on. Stop the rhetoric of the nonsense, okay? In the debate, they could do that stuff. That's rhetoric and nonsense. When you have me on 9/11, let's just stay focused on 9/11, the events that what happened 23 years ago, the attack on America. We've got to get rid of jihad. We all agree we've got to get rid of jihad, right? I'm worried about all these people coming into this country because I'm afraid terrorists have come into this country and they're going to do it to us again. And I never want any family to have to live through what I've lived through. I lost my brother Gary 23 years ago. He was 36. My best friend Doug. And if you could imagine, you look behind me at this trading floor, imagine them all being killed, because that's what happened 23 years ago. It'll crush your heart. It'll crush your soul. And to me, you know, that's the most important thing about today. The most important thing about today is remembering these people, caring for their families, and making sure America stays strong and crushes terrorism around the world so no family has to have to go through what we're going through.
Howard, before we let you go here, you know, you have pointed to an active trading desk very full of people. You've talked earlier in this interview about how you've been hiring more, you have been building. There's another moment coming up for you that I know that you are very much looking forward to. That is the launch of your new futures exchange with the backing from a lot of Wall Street giants. How is that going? What can you expect from day one? And are you concerned at all around any of the regulatory environment around it, given some of the clearing questions around London?
Okay, so Shonali, because I'm on your show, I'm going to tell you we are going to open our futures exchange on September 23rd. So the announcement of that was right here, right now, on your show. So we're opening our futures exchange, FMX, on September 23rd. And we are backed by the 10 largest trading firms in the world. Starts with JP Morgan and Citibank and Bank of America and Barclays and Wells and Goldman Sachs and Morgan Stanley, and then Citadel, you all know, and then Jump and Tower, two firms you may not know, but they are the largest futures traders in the world. We're going to do rates futures, which is interest rate swap futures, which are called SOFR futures, and U.S. Treasury futures. We're going to start with SOFR futures, and that's going to start on September 23rd. And then in the first quarter of 2025, we're going to roll out Treasury futures, and we are going to create a break in the monopoly built by the Chicago Mercantile Exchange. And it is so fun and so exciting. And you are right, I am completely jazzed about FMX. So FMX is owned by this company, BGC, which is the largest wholesale financial service company in the world. So we broker everything in the world that doesn't trade on an exchange. And on September 23rd, we open our fully approved CFTC futures exchange backed by the 10 greatest trading firms in the world. And I think we're going to bring competition to the market. And I am jazzed.
All right, you heard it here first. September 23rd, of course, FMX opens for business. Howard, we look forward to that launch, and we really appreciate your time today, of course. That is Howard Lutnick, Chairman and CEO of Cantor Fitzgerald and the BGC Group.
All right, that was Cantor Fitzgerald CEO Howard Lutnick speaking with Shonali Bassett, Katie Greifeld, and Matt Miller on September 11th. Again, Cantor Fitzgerald lost 658 employees on September 11th, just devastated there in the World Trade Center. So it's a big day for them as they continue to raise money for charity.
Yes, absolutely. And also they also discuss politics and kind of the future of the country, as well as maybe co-head potentially of a transition team for former President Donald Trump. Looking at the markets here, the S&P is down by 1.6%. We just continue to trade heavy and roll over here. So we want to get you updated on a biz flash. And for that, we go to John Tucker. John.
And all the major averages, they are lower, Alex and Paul, after this morning's inflation data. Traders think it's probably less likely the Fed's going to cut rates by 50 basis points. And that has equity investors disappointed. Major stock average all down by over 1%. All 11 major industry groups in the S&P 500, they are down right now. The biggest drag, that's coming from energy. Now, WTI slightly higher today, just about $65 a barrel. After the significant sell-off this quarter, concerns of slowing economy, pushing demand lower. And that's even, as Alex, you pointed out, we have a hurricane churning in the Gulf of Mexico. NVIDIA could hear today some sort of an update on the Blackwell chip. NVIDIA's CEO is speaking in San Francisco. He's actually going to be interviewed by David Solomon. Right now, shares of NVIDIA, they have turned lower. They're down 0.3%. After the debate last night, Trump media shares down another 16.6%. And GameStop shares, one of the meme stocks, falling on fundamentals, believe it or not, down 16%. As far as treasuries after the inflation data today, 2-year yield, that has now turned lower, down just about 2 basis points. We're at 3.57, and the 10-year yield, 3 basis points lower, that is at 3.61. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash. Paul and Alex, it is significant. Big storm coming this way.
Yeah.
Or at least to the oil refiners in that region anyway. And oil,
I know. And yesterday was actually even more impressive because that's when the hurricane kind of changed course going to Louisiana, right? And that's when some of the oil companies started to shut down their rigs. And oil was down like by 3%. Like, that's something you don't necessarily see. That spread is a little bit unprecedented. Joining us now is Henrietta Triss, a managing partner and director of economic policy at Beta Partners. She's joining us. She's in New Orleans, actually. So, hey, just real quick, are you safe? Is it okay? Is the storm coming? Like, are you bracing for it?
Probably right when I get off here. It'll come just at the end of this interview. It's expected to hit tonight, but it won't be too much of a big deal, so I'm not surprised that oil stocks aren't moving too much. We're used to this. This is what we prepare for.
Okay, fair enough. All right, so we got that part done. Clearly, you were up late watching the debate with the spin and all the like. What's your pitch? What's your 1 minute, 2-sentence takeaway?
I think that Harris clearly ran away with the debate. Trump missed a number of opportunities to stick to a script and stick to policy. And I think that was a mistake for him, and he could potentially have to correct it with a second debate. I doubt one will take place. But if the polling data starts to turn against him, as Kamala Harris's sort of appeals to moderate voters last night, should that work, he may have to commit to another debate.
Henry, I'm just reading through your notes here, and you make a point here. About 95% of the electorate has already decided how they'll vote in November. Did I read that right? And if so, is that normal or is that crazy?
Almost everybody has decided how they're going to vote. There's only about 5% of the electorate that's undecided right now. They're not, they're actively trying to ignore politics, but they're going to engage post-debate. They're going to see clips from last night and start to make a call. There was, interestingly, 14% of viewers last night thought that they maybe questioned their priors. They thought they might, be willing to change, but then ultimately only 4% of them did. So we have a really sticky, very partisan America, and that's going to make this election close until the very end.
What do you think can move the needle now? In some ways, this was the public's first introduction to Vice President Kamala Harris. President Trump is still a known quantity, but nonetheless, how do they then further this if there's no second debate?
Right. 23% of Americans are still looking to learn more about Kamala Harris's policies. Most of Americans already know all of Donald Trump's policies. So the real uphill battle is on Kamala Harris's side. Right now, as my odds suggest, Trump is winning this race. The Electoral College favors him in most swing states and within the margin of error in every single swing state. So it's really up to Harris to convey her homebuyer tax credit, her position on abortion, her thoughts on capital gains rates, corporate tax rates, and sell that message to the American public. And I would suggest that the onus is on her to get that done.
Just on Bloomberg Radio and television, Henrietta, just before we came to you, we were listening to Cantor Fitzgerald CEO Howard Lutnick, who is a strong Trump supporter, make the point that we've heard from a lot of folks that VP Harris should be more accessible to the media, should do interviews, should do town halls, press conferences. What do you think about that?
I'm sure that she will. As we go forward, the next major event is not until October 1st with the vice presidential debate. I think there's, 20 some odd days between now and then for the Harris campaign to take, a sit down with a major editorial board and do more live town halls. What I think Republicans want to see is her stand alone as opposed to with Tim Walz, which is, of course, what the interview with Dana Bash on CNN was a few weeks back. So I expect that she'll get out there. And the fact that American voters want to know more about her policies means that it is in her best interest to do that as well.
What I also was noticing when I was reading a lot of takes on independents who just weren't clear is that a lot of them are the people who go to the store, buy stuff, come home, and it's rough, and economically it's really hard, and that the debate last night didn't speak to that inflation or the economics. And you take a look at the inflation data today, right? It's kind of a mixed bag for everyone, but some of those core things like eggs are still a lot higher, and those prices are still a lot higher. How do the candidates really tackle that in a meaningful way where people who are truly undecided can get some clarity?
This is why debates are so important for the challenger or the other candidate, in this case, Donald Trump, to really hold her feet to the fire and say, answer these questions, speak to inflation. And Harris has, to her credit, they will have a great track record to say it was 7, 8, 9% 2 years ago, and now it's down to under 3%. So there is a message that can be delivered from both sides, but they just weren't sticking to that script last night. Another reason why I think Trump would benefit from a second debate is because he could hammer those points home, which he should have done last night. I do think also, just to speak to the inflation data, gas prices still being low, to bring it back to the beginning of our conversation, is really important here. Gas prices factor into the American psyche, I would say, more than the price of eggs. So that being low, I think, does help Harris.
So what is the role of the vice president candidates here? Do they move the needle at all on a major election?
I mean, usually not. It's a much smaller audience that watches a vice presidential debate. They're not viewed as the leader of the country. We used to say that it's, the least or the most thankless job in D.C. Obviously, Kamala Harris and Joe Biden's dynamic this year upended all of that. But in general, the vice presidential debate is not a blockbuster affair. They're usually pretty sleepy. In fact, a couple of cycles in the past few presidential election cycles, you get fewer than 50 million or even 30 million viewers.
October surprise, it does happen. Could there be one now? Like, let's look ahead. If there's not another debate, everyone wants Kamala Harris to speak more. What could an October surprise be?
I think it would be ridiculous for anybody in a seat like mine to say that there won't be an October surprise in a year like this. I think at this point, what I try to hone in on for investors is that it could very easily be foreign policy related. Israel-Gaza, I think, presents a stark opportunity for some sort of shock event that could be a problem, particularly for the Harris campaign, since Joe Biden is the incumbent. I think the immigration data, the numbers have come down so rapidly since December via executive order. I don't see that changing. A government shutdown is probably something that should be on people's radar. Trump tweeted about this last night, supporting a government shutdown. That could be disruptive, but historically Republicans get blamed for that, so I don't think it's in his best interest.
30 seconds, Henrietta. Taylor Swift endorsement, does that mean anything?
I think it does. We want to see his voter registration spikes, particularly in the 29 and under demographic. We've already seen that go through the roof. I believe it's 87% hiked up since 2020. And of course, you have 3 times higher registration rates for Black women, 147 for Latino women, and I think 87% is the number for all women. So that registration spike is what you'd want to watch.
All right, Henrietta, thank you so much. We appreciate that. Henrietta Trez, Managing Partner, Director of Economic Policy at Veda Partners, joining us via Zoom from Louisiana, again, in the path of that incoming hurricane. So hopefully, Henrietta and all the good folks down in that part of the world stay safe over the next 24 hours. We'll keep an eye on that. S&P 500 off 1.4%. That's 78 points. The Dow's off 630 points, 1.5%. A little more coming up. This is Bloomberg. Good morning.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney.
The real outperformance has been the U.S. corporate high yield.
Are the companies lean enough? Have they trimmed all the fat?
The semiconductor business is a really cyclical business.
Breaking market headlines and corporate news from across the globe.
Do investors like the M&A that we've seen?
These are 2 big-time blue-chip companies.
The window between the peak and cut changing super fast.
Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
All right, happy Wednesday, everybody. I'm Alex Steele alongside Paul Sweeney. This is Bloomberg Intelligence Radio. We have a great hour lined up for you as we broadcast to you live from Interactive Broker Studio right here in Midtown Manhattan. We're going to go back down to Philly. David Gura is there, correspondent from Bloomberg and host of the Big Take podcast, to get more on the spin after yesterday's presidential debate. Ira Jersey, Bloomberg Intelligence chief U.S. interest rate strategist, will join us on the move into the bond market. The bond bull kind of rearing its head again today after that CPI number. Kim Ford Forrest, founder and CIO of Boca Capital Partners. What do you do when you see an S&P down 1.5%? And there's some really heavy selling pressure, and the technicals don't look good either. And Nathan Dean, Bloomberg Intelligence Senior Policy Analyst. We're going to take a look at some capital requirements for banks and also his take on that presidential debate. But in the meantime, let's get you all caught up with a Biz Flash. And for that, we go to Charlie Pellet. Charlie?
Right, thank you very much, Alex. Still, let's get right to the numbers. We have seen a rapid deterioration since our last update here on Bloomberg Radio. S&P now at 54.15, down 80, drop right now of 1.5%. Dow Industrials down 6.55. That is a decline of 1.6%. We've got NASDAQ lower by 215 points, a decline right now of 1.3%. Your 10-year, 3.62%, with a 2-year, 3.57%. Spot gold down 0.3%, 25.09 the ounce, and West Texas Intermediate crude up almost to 1% now, 66.33 a barrel on WTI. Brent still below $70 a barrel, up 0.6%. Barrel of Brent 69.70 right now. Stocks got pummeled after a faster than anticipated inflation report fueled bets that the Fed will move gradually with rate cuts, which could diminish the odds of a soft economic landing. All major groups in the S&P 500 are retreating. JP Morgan Asset Management Chief Global Strategist David Kelly is now expecting a 25 basis point rate cut following this morning's report.
The Fed must be aware that if they go aggressive here, they're in danger of undermining consumer confidence. And honestly, the economy is doing exactly what they wanted to do. It is settling into a softer expansion, a slower expansion. That's what they want. So they only have to gradually return to normal on interest rates.
David Kelly of JP Morgan Asset Management interviewed this morning on Bloomberg Surveillance. Well, after last night's debate, shares of Donald Trump's social media company are tumbling 15%. DJT down now by $2.72, down by 14.6%. Trump Media and Technology Group operates Truth Social and counts the presidential candidate as its top shareholder. Recapping stocks, Laura, S&P down 80, a drop right now of 1.4%. For on-demand news 24 hours a day, subscribe to Bloomberg News now wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you so much. We appreciate that. Alex Steele and Paul Sweeney live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. So head over to youtube.com and search Bloomberg Podcast. An important message for our listeners in San Francisco. Starting October 1st, the place to listen to us in the Bay Area is on the Bloomberg Business app. It works seamlessly in your car with Apple CarPlay and Android Auto. Make the switch today because October 1st, Bloomberg Radio is streaming directly to your phone. The Bay Area's new home for San Francisco radio, for Bloomberg Radio, is the Bloomberg Business app. Download it for free at the Apple App Store or on Google Play. As Charlie was just mentioning, we've got selling in the markets today with the S&P off 1.4%. Let's take a look at some individual names that are moving here today. With that, we go to Nora Melinda. She covers all the equity markets for Bloomberg News. Nora, what are you looking at?
Well, as Charlie was just mentioning, I'm watching the Trump trade. We're seeing Trump trades dialing back even more after last night's debate between Vice President Kamala Harris and former President Donald Trump, and especially with Kamala Harris coming out on the stronger end, seemingly from last night. We're seeing shares of Trump Media and Technology Group, that's ticker DJT, down. Shares are tumbling as much as 18%. But I'm also keeping an eye on private prison stocks. Of course, immigration has really been in focus in terms of this campaign for both candidates. And so I'm watching a lot of stocks like Geo Group that are invested in different detention centers for immigrants, illegal immigrants, and crypto stocks. We're also keeping an eye on them. We're seeing Bitcoin in focus as well as Coinbase and green energy. I'm also watching. We're seeing green energy shares gaining on speculation that Democrats would bring more funding to the transition to renewables.
Yeah, that's interesting. AES, you have for solar, Enphase, they're all on the upside when it comes to the S&P. You're also looking at DBI, so that's designer brands. That stock is getting just smoked right now. Okay, so Paul, this is DSW chain parent.
Exactly.
DSW is where you go to get designer shoes on really super good sales. Go ahead.
Really?
It's where I would go, right before homecoming, right before any big gathering, maybe a wedding. You're going to swing by there quickly to see if you can get any shoes for the low. But I'm seeing shares of DBI down. They're pairing their drop, but earlier fell as much as 25%. That is the lowest intraday level in 4 years. Now, this is coming after an unexpected decline in comparable sales for its second quarter and a significant EPS shortfall. Management said that it saw sustained pressure on challenged categories, which it cites to be dress and seasonal. So the company slashed its annual forecast across the board. But when we look at it on a broader scale, the stock is trading below $5 now, which is more than 75% below that 2021 high we saw a while back.
And Viking Therapeutics, is this a weight loss drug thing?
Yep, you're right on the nose. This is an obesity drug developer. Of course, I'm looking at this on the long term. Year to date, we're seeing shares up more than 200%. Wow. Of course, everyone's really been investing and turning their eyes toward a lot of these obesity drug developers as people are looking toward weight loss solutions. We're seeing shares of Viking Therapeutics, that's ticker VKTX, climbing as much as 6.7%. And this is after JP Morgan initiated coverage of the stock with an overweight rating and put it on its positive catalyst watch.
All right, Norma Linda, thank you so much. We appreciate that. Norma Linda, Bloomberg News. She covers all the equity markets, joining us here in our Bloomberg Interactive Brokers studio here. Well, last night, Democrat Kamala Harris and Republican Donald Trump sparred during the ABC News presidential debate Philadelphia that featured fireworks over abortion rights, the economy, and foreign policy. Let's take a listen.
The American people want a president who understands the importance of bringing us together.
She's a Marxist. Everybody knows she's a Marxist.
Donald Trump certainly should not be telling a woman what to do with her body.
I'm not in favor of abortion ban, but it doesn't matter because this issue has now been taken over by the states.
People start leaving his rallies early out of exhaustion and boredom.
She's going to do this, she's going to do that, she's going to do all these wonderful things. Why hasn't she done it?
All right, there's a little color from last night, the debate between Kamala Harris and Donald Trump. Joining us right now from Philadelphia is David Gurr. He's correspondent for Bloomberg and host of the Big Take podcast. David, I know you're sick of the cheesesteaks. You've been on the cheesesteak diet for the last 2 days. I guess we have a little bit of perspective here. I guess the question for a lot of folks is, where do we go from here for both of these candidates? Do they just stay in those 6 or 7 states and just until Election Day?
I think that's likely to happen. I mean, we're talking about swing states and swing districts, Paul, and I think we're going to see these candidates and their running mates and their surrogates really flooding those states over these next few weeks. So just looking at the principals in particular, looking at Donald Trump, he's headed out west. He's going to go to Nevada. He's going to go to Arizona. He's going to go to California for a press conference at the end of the week. Vice President Harris is making her way down to North Carolina tomorrow. She's been there 18 times. The governor of that state told me yesterday. She'll be back here in Pennsylvania at the end of the week. Tim Walz is going to be in the Midwest. J.D. Vance traveling the country as well. So they're going to try to capitalize on whatever momentum they think they got out of the debate last night and bring it to those states. And we're talking about states, we're talking about swing districts in particular, just at such a granular level here, guys. And I think that that's going to be the focus. Not only will Kamala Harris be going to North Carolina, she's going to Greensboro and Charlotte. So the same cities that she's been to several times here in the last couple of months.
We've had some time to digest the spin from the Trump campaign, the Harris campaign. How is ABC faring on the day after?
It's a great question. I mean, they're getting a lot of criticism for how they fact-checked in real time during the course of this debate from supporters of former President Trump. You know, going into it, we knew the rules would be the same as they were at the debate that we had in June in Georgia. The moderator said that they weren't going to fact-check in real time, but there were a couple of pretty egregious statements from the former president where David Muir and Lindsey Davis stepped in and clarified. On abortion, for instance, Donald Trump kept referring to the fact that there were abortions in some states of babies after birth or fetuses in their 9th month of pregnancy, and Lindsey Davis stepping in to say there is no state in this country that would allow the execution of a baby after its birth. So, you know, they're getting criticism for that, but I think that these were circumstances in which those comments were so egregious, the moderators likely couldn't let them stand. And I saw what Michael Grinbaum, the media reporter for The Times, wrote this morning. He very praiseful of them, saying what they managed to do was kind of keep a perimeter of truth around the course of that debate and kind of set a model for how these debates might unfold in the future.
David, Alex and I were just speaking with Henrietta Trez from Veda Partners just moments ago, and you know, she pointed out 95% of the U.S. electorate has already decided who they will vote for in November. That is, only 5% are quote-unquote undecided. How shocking is that, and how do the campaigns kind of think about that?
I mean, it's pretty shocking just to see how calcified the electorate is in their beliefs. And, we were talking a couple of days ago, Paul, just about the latest poll that we got from the New York Times and Siena College. And what that indicated was there is still a chunk of the electorate, we say in response to that survey, that they don't really know who Kamala Harris is or what she stands for, what her policies are. She understood that, I think it's fair to say, and over the course of the debate last night, did some work on her biography to convey sort of what her background was, who she is. And then, the other part of that was to kind of present herself as somebody who could be seen as presidential. Now, Donald Trump, of course, has been president before. He's well known to the electorate. It's a difficult thing to kind of think through what it is for these undecided voters. Again, we're talking about thousands, maybe tens of thousands, but not a huge quantity of the electorate who haven't made up their mind yet, what they're looking for. And looking at the whole course of the debate last night, which was so much centered on style as opposed to policy, I think that that's certainly in the case of the sitting vice president, was what she wanted to emphasize, that she could be seen by those undecided voters as somebody who could occupy the top job in the White House.
All right, David, we really appreciate it. We hope that today you do get a chance to sleep and get some Philly cheesesteak, because I guarantee you that has not happened. All right, David Gura of Bloomberg News and the host of the Big Take podcast. All right, let's get back to the markets here. So equities continue to roll over. Bond market, quite interesting. You had a sell-off right when those CPI numbers hit. You had a spike in the 2-year yield. And then once the cash market opened for the equity market, the bonds continued to really roll over with yields moving significantly lower now. Ira Jersey, Bloomberg Intelligence Chief U.S. Interest Rate Strategist, joins us. I shouldn't say significantly lower, but compared to where they were, it was quite a move. What are we making of the move today?
Yeah, so after the CPI report came out, the market was thinking, oh, well, maybe the Fed is less likely to do a 50 basis point rate cut next week, and so we're going to readjust that front end yields. Once the equity started to roll over, you also have seen a pretty big rally in European rates this morning, our time, in the afternoon their time, and I think that Treasuries have a flight to quality bid from the risk off in the U.S. markets, but also are being pulled down a little bit by the global rate environment as well. So again, not huge moves on a day-on-day basis, but like you said, Alex, the fact that we were off by 6 basis points in 2-year yields, and then now we're essentially unchanged. I think that's meaningful enough that the market is not 100% sure right now, and certainly we're not priced for just the 25 basis point cut next week.
So, Ira, how do you think our friends at the Federal Reserve will read this inflation data today?
Yeah, so our view is that this solidified the idea that a 25 basis point rate cut is in the cards. Again, 50 is not impossible, and certainly the market doesn't think so either. But at the same time, a 0.2% inflation print is still above the Fed's target. So even though they want to cut interest rates because they're worried that the economy is starting to slip, and certainly they've been focused more on employment than inflation in recent months, that they can start a slow rate cut cycle. I know some houses on the street think that they could go 25 and then 50 basis points for a couple of meetings thereafter. I suspect at the end of the day, they're going to go 25 basis points at every meeting. So the market maybe has gotten a little bit ahead of itself when you look at pricing for, say, January Fed funds futures or even 2-year yields for that matter.
Yeah, so it seemed like what happened is once we got the print that 50 basis point potential cut moved more to December rather than pricing it out. It just kind of pushed it off a little bit. Does that need to be pushed out even more, or is it just taken out altogether?
Well, I think as a base case, and the way that I'm thinking about how the economy might develop, and then what the Fed's reaction function, and therefore the Treasury market's reaction function to that new economic news, is that the economy is going to continue to slow, but not very quickly. So therefore, the Federal Reserve will be able to be patient and go in 25 basis point increments. And then maybe at some point it might do a 50, but I don't think that the Fed necessarily wants to, and certainly as a first, and we've been saying this for months now, is that if the Federal Reserve were to start with a 50 basis point rate cut, that would be like a shock and awe kind of event, and I think that would show the market and maybe just Main Street businesses and households that the Fed's panicked and they see something maybe that's much weaker than most of the economic data that's coming in suggests. So I think that would show some panic, and that's another reason to think, hey, they'll go 25s unless and until you wind up having negative negative payroll print or even $50,000 person payroll print would be enough for them to say, hey, the economy's not growing anywhere near potential, so we really have to cut interest rates significantly. But until we get to that point in the data, I think that the Fed's going to go 25 basis points. And look, this is all like short-term interest rate trader minutia, quite frankly. And I think for the broader markets, you have to say, okay, the Fed's in easing mode. The question is how fast and how far, not necessarily are they going to be cutting rates.
Ira, about 30 seconds left here. The election, the Treasury market. I don't think I heard the yield curve mentioned last night at the debate, but how do you guys frame out kind of the political risks here?
Yeah, so we put out our we put out a note on what we thought the big impactful things for the Treasury market will be based on the election. Most of those are not expecting a big reaction on election day one way or the other, but nuanced things like who's the next Fed chair going to be? That's going to matter. If President Trump wins election again, it won't be Powell. Maybe for Kamala Harris, it will be Powell, and if not, it will probably be someone else who was maybe a Biden appointee to the Fed. So those are the types of things that matter. And then, of course, things like budget deficits. Neither of these candidates is likely to be a deficit hawk, so therefore you're likely to continue with relatively large budget deficits, and that obviously has an effect on pricing in the Treasury market.
Ira, always a pleasure. Always great to catch up with you. Ira Jersey joining us. He is Bloomberg Intelligence, a senior U.S. interest rate strategist joining us there. And just to catch you up, we're looking at a bond market with a little bit of buying here. You get the 2-year flat, so about 3.59%. But again, where we were just a few hours ago, very different. The 10-year, 3.63%. So we're about 4 basis points disinverted. Again, a move after the cash market opened here in the U.S. As we continue to trade lower, the S&P is off by 62 points. The NASDAQ is off by 120. Volume also very strong. All right, coming up, we're going to get a more breakdown on this market with Kim Forrest, founder and CIO of Boca Capital Partners. Her outlook on the market, where do you buy the dip? We'll break that down. This is Bloomberg Intelligence.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 11:21 on Wall Street. We do check markets all day long here at Bloomberg. Stocks are getting pummeled with the Dow Jones Industrial Average down almost 600 points. We are off session lows, but for the Dow, still a drop of 1.5%. S&P down 68 right now. That represents a drop of 1.2%. NASDAQ is down 143, lower by 0.8%. 10-year at 3.63%, with a 2-year at 3.59%. Gold down $3.50 the ounce, down 0.1%, 25.13 on the precious metal. West Texas Intermediate crude advancing 1%. WTI at 66.42 a barrel. Brent just under 70 now at 69.70 for a barrel of Brent. That represents a gain of 0.7%. A faster than anticipated inflation report is fueling bets that the Federal Reserve will move gradually with rate cuts, which could diminish the odds of a soft economic landing. Again, the S&P now down 69, a drop there of 1.3%. Morgan Stanley's Mike Wilson says the AI boom that powered the S&P 500 index to a record earlier this year is fizzling out, so the stock market will need a new catalyst if the rally is going to resume. The Philadelphia Semiconductor Index down 8.5% this month. AI poster child stock NVIDIA, though, advancing today. We've got NVIDIA shares up now by 0.8%. After last night's presidential debate, shares of Donald Trump's social media company are tumbling. Truth Media and Technology Group operates Truth Social and counts the presidential candidate as its top shareholder. Right now, DJT on the ticker down by 13.5%. Again, recapping, stocks are getting pummeled. The S&P down now by 1.2%. For on-demand news, 24 hours a day, subscribe to Bloomberg News now, wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Charlie Bell, thank you so much. We appreciate that. Alex Seal, Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. So head over to youtube.com and search Bloomberg Podcast, and that's where you will find us. As Charlie was just reporting, we've got some selling in the stock market here today, perhaps on the back of a little bit higher than expected core inflation. Let's check in with a professional here. Kim Forrest, founder and chief investment officer of Bouquet Capital Partners, joining us from Pittsburgh, PA, via that Zoom thing. Again, more technology. How about that? Kim, thanks so much for joining us here. What do you make of today's trading here, and maybe the last two or three days of trading? Been a lot of volatility.
Sure. Yeah, I think, as always, investors are pulled between the two poles of fear and greed, right? And I think this year has taught us that even with ho-hum kind of economic data, that the market can go higher. And I think that is what keeps the greed into the market right now, is that we look at our recent past and say, hey, NVIDIA eclipsed all other stocks and then dragged 6 other stocks with them, starting somewhere in the second quarter. And, portfolios turned out pretty good. But I guess wisely, people are looking at the Fed and saying, are they too late? We know they're going to lower interest rates. That's pretty clear. But how much and how fast? And I think too fast would indicate that the Fed is seeing trouble ahead on either one of its mandates that it's supposed to take care of, and that would be stable prices and full employment. So, which you put those two together, you have the whole economy, right? What else is there in the economy? But no, investors are afraid that the Fed is too late, too slow, and that we're going to get a hard landing. Mm-hmm. Now, as somebody who has seen a hard landing, in 1993, Pittsburgh had a 17% unemployment rate because of inflation and the steel market being forever changed. And I don't think we are headed for that kind of hard landing, just to set expectations.
So, Kim, I hear you. And then I look at what's happening with bank stocks, and I'm confused. I mean, regional banks are getting really hit. Broader big banks also getting really hit by news that we already knew, right? Like we knew that rates were coming down. And in theory, if they come down less quickly, that should be better for their net interest income, right? So are banks telling us something else right now?
Well, I think they're really concerned about the consumer and borrowing, and specifically consumer borrowing. I don't know that regional banks would be all that much affected by it. It's usually credit cards. And I don't think that would see a whole lot of, housing issues, because most of the borrowers have very low interest rates, and the most recent borrowers, they're as everybody's been pointing out, the housing market is slowing and has slowed. So I'm not quite sure why the smaller banks are being sold off. Maybe it's, continuing commercial real estate issues, of which, nobody can pretend that they're not there. We don't go to work 5 days a week anymore. You need less footprint. It's an issue, and it's something that remains unresolved.
So Morgan Stanley's Mike Wilson saying that the AI trade may be fading here in this market, and calls into question what will be the leadership for this market. How do you feel about that thought there?
Sure. Well, I think it's a pretty good bet that most investors have overplayed their hand on the timeline of AI rollout and how deep and pervasive it is. As somebody that is an ex-technologist in AI, I don't see the killer app that are going to make corporations, and certainly not individuals, pay for access to it. So right now it's a free service. But that could change in the future. It's probably going to change in the future, but we don't know how long of a timeline. Wall Street wants it yesterday, not tomorrow. So, and it's a pretty many tomorrows in the future where we think AI is going to be a player. But you're right. Where is the next area? I would say that investors that need to put money to work, and we all do because we're saving in our 401ks, they should look at the smaller companies, the unloved companies that have good products. And I love the medium-sized companies over $1 billion to maybe like $20 billion, because especially if they have great products and a stable balance sheet, they are able to live on through tough times, but also they are acquisition candidates. And as rates come down, we will see more mergers and acquisitions, because the big need to have new products or the product, growth. So they will do it either organically or by acquisition. And I think it's a pretty good idea to look at smaller companies, but not the smallest companies, for addition to your portfolio.
Okay, so the question, where do you buy the dip?
Where do you buy the dip? Well, that's market timing, isn't it? And I think we're all warned about that. So I think it's on a case-by-case basis that you have to look at each company and say, is this a good deal? If it goes 10% lower, am I going to be angry about having bought it, right? Give yourself some kind of wiggle room and understand that, companies can go lower on all sorts of news. So I think you have to do it on a case-by-case basis. And, this wasn't in my note to you guys earlier, but maybe energy is an area as well. It seems to be especially selling off hard. And I would certainly put energy, as even bigger companies, as well as the small to medium-sized companies, on your list, on your shopping list, and look at them daily and say, is today the day I'm going to buy whatever it is? It is that simple.
Kim, how about valuation? Obviously, it's important when, in the securities business that you're in, but how do you employ valuation? How high is it on your list of, decision factors for buying or selling a security?
Well, actually, I don't look at it in isolation, right? I'm a growth-ish manager. I'm growth at a reasonable price. Yep. So I'm always thinking that the company that I'm going to buy is going to grow, and it will grow more into its valuation. So I will look at PEs that other value-oriented managers probably will not. But that being said, you also have to understand, in a declining rate environment, you should expect to pay a higher PE, and that's because of the math behind the whole discounted cash flow equation, which we're not going to go into at this point. But I also think it's extremely important not to look at them in isolation, but to their competitors and to their industry, because each industry has a different PE profile where it's merited. because the balance sheets are completely different, right? Like a software company is different than, I don't know, a cement making or a steel making company that has a lot of plant, property, and equipment. So those are the kind of things that change your perception of a PE, whether it's rich or fairly valued.
And this is a great setup into talking about last night's debate, because from the way you invest in stocks and how you look at structural trends, even in cyclical areas of the market, how do you think about who's going to be running the White House over 4 years? Like, what are there areas that actually impacts how Kim Forrest looks at the market?
Well, it does, but slowly, because I don't know, I have this quaint idea that the president, regardless of who it is, actually is the executive of the government, and that Congress gives them a budget. So things like, I don't know, housing grants of $25,000, that still has to go through a Congress. And that is a very slow process. So I am glacial, and I try to look for bigger trends that eclipse politics. So I'm not terribly concerned about what's going to happen other than taxation. Taxation is one of those things that can come in fast. But any of the more spending of the government and areas in which they spend, it's more glacial than we ever want to consider.
All right, Kim, thank you so much for joining us. Kim Forrest, founder and chief investment officer of Boca Capital Partners from Pittsburgh, PA. Looking at the stocks continuing to roll over here with the S&P off about 1.1%, that's 61 points. NASDAQ off 0.6%, 113 points. And the Dow off 1.3, 538 points. That was actually the October 1987 decline, 528 points. So that's a big thing there. So interesting. What do you make of this oil here? I mean, again, it's staying down here low despite some of those you would think would be environmental factors, like the, I don't know, hurricane coming into the refining basin.
Well, again, I was talking to an oil strategist person, trader person, which, shocker.
Yep.
And talking about the weakness in China, but also the idea that without geopolitical risk premium and without OPEC Plus still supporting the market somewhat, I wonder if we'd even be lower than we are. Now, that said, there doesn't seem to be a ton of political risk in there. Like, there's literally a tanker on fire in the Red Sea, and it's like blinking for the oil market. I think it just sets us up, too, for just a more volatile oil trading period rather than, hey, we're just based on supply and demand. Check you later. Here's the marginal cost of oil, and that's where oil's going to trade. But it's like that volatility, and that makes the investing in that commodity really difficult. It makes, if you're an oil CEO, that makes it very difficult as well. I can go on.
Yeah,
but,
absolutely. All right. Coming up, Nathan Dean, Bloomberg Intelligence senior policy analyst. He's going to talk to us about this new Basel endgame. The bank's presumably only going to face a 9%, not a 19% capital jump from Basel to endgame rules. So on the margin, a positive for the banks, although they did not trade up on that news. But we'll see how that plays out for their income statements and balance sheets. That's coming up. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 11:40 on Wall Street. We do check markets all day long. Here at Bloomberg, we have got U.S. stocks off session lows, but still looking at a 0.9% drop in the S&P 500 index. The S&P right now down 48 points, 54.47. The Dow lower by 464, down 1.1%. The Nasdaq Composite Index down 60, a drop there of 0.4%. 10-year at 3.64%, with a 2-year at 3.60%. Gold down 3.20 the ounce now to 25.13, down by about 0.1%. Crude is advancing. West Texas Intermediate up 2.2%, 67.20 a barrel. And Brent back above 70 now, 70.38, advancing by 1.7%. U.S. equities getting pummeled this morning after a faster than anticipated inflation report fueled bets that the Fed will move gradually with rate cuts, which could diminish the odds of a soft economic landing. And with more on today's CPI report, here's Bloomberg's Vinny Del Giudice.
Core consumer prices picked up in August on higher housing costs, undercutting chances of a jumbo Federal Reserve rate cut at next week's policy meeting. Traders now envision a quarter-point cut in the benchmark interest rate. Last Friday's weak payroll data had boosted expectations for a half-point trim. In addition to housing, last month's increase reflected rising costs for airfares and apparel, as well as daycare and preschool. Auto insurance costs also continued to rise. Vinny Del Giudice, Bloomberg Radio.
Again, we've got crude oil advancing. West Texas Intermediate up 2.3%, not helping oil names, including ExxonMobil down 1.5%, BP down 0.1%, and Chevron shares, they are falling by 0.8%. Shares of DJT, Donald Trump's social media company, Trump Media and Technology Group, are plunging today. Trump Media and Technology operates Truth Social and counts the presidential candidate as its top shareholder. DJT shares down now by 12.2%. Again, recapping, stocks lower, S&P down 0.8%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thanks so much. Alex Steele here alongside Paul Sweeney. This is Bloomberg Intelligence Radio. We bring you all the top news in business, economics, and finance through our lens of our Bloomberg Intelligence folks. They cover 2,000 companies and 130 industries all around the world. Want to check in now with Nathan Dean, Bloomberg Intelligence Senior Policy Analyst. Lots of things to go through, but first, you know what's coming, Nathan. What was your broader takeaway from the debate last night?
Well, I don't think it changed the narrative all that much in terms of the election victory. I mean, I think most people would argue that the Taylor Swift endorsement would probably potentially have a little bit more in that. But, you know, we didn't get a lot in way in terms of policies that we could actually then go forth and tell our clients and so forth. So what we're thinking is essentially is we're reiterating that tariffs and taxes are really what you should be paying attention to next year. We heard some comments from President Trump on tariffs. You know, obviously his plan for 60% tariffs on all goods from China. We've also heard him say 100% tariffs on countries that move away from the dollar. But, you know, we would always just say that, you know, he can do this. The executive power is there. But we always say that when he goes forward with a tariff, we think that there are going to be several opportunities down the line for him to essentially pull back, negotiate, but ultimately think of headline risk in the first place. But then, you know, we probably have some time before those tariffs actually were coming enforced.
Nathan, is there a sense that in Washington, amongst, you know, the policy folks, that we need more policy meat on the bone from Vice President Harris going forward?
So I would argue not. I mean, I don't think it's one of those elections. I think this is an election where both candidates are offering a very stark contrast view on America. Whether you're a Trump supporter or a Harris supporter, you generally have an idea of where they are going to be. You know, we often hear that people want to hear policies, and look, I certainly want to hear those policies because it helps me with my day job. But I just don't think it's that type of an election because we're only 55 or so days from the election. And in Kamala Harris's defense, she was still trying to play catch up. So I think what we're going to have to do is continue to play what if scenarios. Okay, if Kamala Harris continues to support the Biden-era policy, this is what it means. Or if she changes, like we think that she's going to change and make it a little bit more tougher on consumer-facing sectors like grocery stores, then ultimately what does that mean? And we think in that case, obviously, for like Kroger, Walmart, and Albertsons, her comments on price gouging, for example, are actually a very low risk.
Then let's turn to the banks. Banks getting pummeled yet again today. I didn't see a trigger necessarily for the continued sell-off. We spoke about this a little bit yesterday in terms of those capital rules coming in at 9% for the big banks versus 19%. I talked to Mike Mayo over at Wells Fargo, always outspoken, and his kind of whisper number for those capital rules was like a 5 to 6%. So from that sense, this was a little disappointing. Is this going to be onerous for them or not?
So I think it really depends on who you ask. Our original thesis is that they were going to come in around 7 to 10%. Now, because what we think is going to happen is right now the the Fed is proposing this 9% increase. But remember, this is the re-proposal. The banks have to go back through the comment period again. And so it's feasible that the Fed could come down even more than that. Because ultimately what the Fed is trying to do here, they're walking a really tight rope. And I'm saying the Fed, but it's also the FDIC and the OCC, is they have to finalize a rule that the banks can essentially say, okay, we will live with this and we won't sue you on it. Because if there's a lawsuit, there is a chance that this rule never goes forward. Because if you go into the Fifth Circuit, the Supreme Court, they've been very skeptical of these types of regulations in the past. So the Fed, I think, is trying to come out and say, okay, look, we were wrong with 19%. Let's go to 9%. We will opt out of those banks that are below 250 billion, those small regional banks between 100 and 250 are now out of this rule. And let's try and come up with a rule where you don't sue us ultimately in the end, because that's something that eventually could stave off the Basel III endgame, even if Kamala Harris wins the presidency.
I mean, this has taken so long, Nathan. I don't put the blame on you. I know you're just analyzing this stuff for us. Is there a sense that Congress, it's like, there's no problem here. What are you regulating at this point?
Well, that's a good point.
Well, look, I mean, this is actually a fairly short timeline for a rule. I mean, I've got rules going back to 2011. They're still out there, and they haven't been finalized yet. So, I mean, going from a proposal in 2023 to now, this is pretty much on par with the normal rulemaking process. But we have a couple of catalysts that will make it really important. First is the election. If President Trump wins, we think this rule is essentially indefinitely delayed. The head of the OCC would flip, and the head of the FDIC would likely flip, and therefore we would think, nah, we're good, we're out. Now, the other thing to keep in mind is like this court argument, because we're going to have a 60-day comment period that will probably be released. Bloomberg News is reporting it could come as soon as September 19th. Comments would then be due in November, potentially even extended into December. But then we think that the Fed will go back and probably have to spend another 6 to 9 months analyzing this to make sure that they don't get sued. And the reason why this is important is because the original implementation date for this was July of 2026. And that's most likely going to get pushed off. And as a result, we've seen in the United Kingdom, for example, they push off their capital requirements associated with the Basel IV, which is essentially the Basel III endgame, as a result, because they aren't sure the Americans are even going to move forward with this.
Right, because in theory, then that would leave European banks at quite a disadvantage, no?
Yeah, absolutely. I mean, there's one thing that we've heard in terms of bank lobbying for the last 15 years of my career is that everybody just wants a level playing field. Mm-hmm. Now, that could be in the same ballpark. It's not going to have to be like for like on the exact numbers. But if you see the Americans pull back from the Basel III endgame, I would have to imagine that the European banks that are adhering to Basel IV would at least be whispering into their regulatory leadership saying, look, the Americans pulled back, we should do the same here. And so I think it's just one of those things where every agency, every jurisdiction doesn't want to be the first one to go, but because the end game is the last remaining piece of the Basel III Accords, this is very important for the Americans to get right or to pull back because, I think global capital just across the globe is going to be very much impacted as a result of what happens here in the States.
All right, Nathan Dean, thank you so much. We appreciate that. Nathan Dean, he's a senior policy analyst for Bloomberg Intelligence. Very helpful in getting to kind of the real important parts of all these policy initiatives down in Washington, D.C. And, the big banks, the 9% is a lot better than 19% in terms of incremental capital. But still, I think a lot of the bankers will tell you, hey, we've already done enough, And
like what problem are you fixing right now with that?
Exactly. Is this all still fallout from the great financial crisis? And the answer really is yes.
Yeah.
This is the end game of all that regulation that started after the great financial crisis.
End game. Look at that. Did you do that on purpose? There was an amazing article I read. This was years ago in The Economist, and it stayed with me because it was basically saying that every regulation that you have regulates the crisis that just happened, and then it actually creates the crisis that's coming up. That you're always fixing the back problem, and it always winds up creating an issue. It was a great timeline, and I thought that was just really quite insightful on that. All right, coming up, we're going to talk about banks because potentially UniCredit could be on its way to buying Commerce Bank. This would be huge. I've been talking about this for years. Will it actually happen? Philip Richards of Bloomberg Intelligence will join us next.
Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
Happy Wednesday, everybody. I'm Alex Steele alongside Paul Sweeney. This is Bloomberg Intelligence Radio. We're broadcasting to you live from Interactive Broker Studio right here in Midtown Manhattan. The headline that truly caught my eye today was UniCredit finally making a move on Commerce Bank. This is something that I've heard rumors about for years. And UniCredit building a 9% stake in the German bank and apparently is planned to enter into talks with the lender, raising the possibility of a takeover that could truly reshape Europe's banking landscape. Joining us now from more is Philip Richards, Bloomberg Intelligence Senior Analyst for European banks. Philip, would the German government let this happen?
Yeah, hi there. It's an interesting one. As you say, this is not a new rumored deal. It's been going on for literally well over a decade now in terms of big cross-border deals. But the simple case remains that any big cross-border transaction among European banks still hasn't happened in the last 15 years since the crisis. So will it happen now? Yes, it's a possibility, but there's still a lot of hurdles left. In terms of will the German government allow them specifically, what it would flag is the German market is very different to all the other European markets. It's got a very big cooperative or mutual society. They've got the Sparkassen, the Landesbanks. So actually the private banks, Deutsche Bank and Commerzbank, are a much smaller part of the overall market. And therefore, could they take out the second biggest German bank? I think it is possible on that front.
Would it be a good deal for UniCredit? I guess what I'm asking is how good of a management team, how good of a franchise is UniCredit?
Well, is it a good deal? I mean, that will come down to the price. And one good thing about Commerzbank is pricing is at a very low level. Even after rallying 20% about today, it's still trading about half book value. In terms of what you get for it, yes, the earnings have been very, very weak for the last 15 years, one of the lowest return on equity of all banks in Europe, but they have increased massively with rate rises across Europe. But of course, the flip side to that, of course, is interest rates now going down. So the question becomes, what will happen to Commerzbank's earnings going forward? And frankly, they're probably going to be going down, and therefore that's where the pressure on them will lie. So are they getting a good deal, or are they paying almost at the top in terms of their earning potential?
What company would that make UniCredit? Like, would this be a giant investment bank and a giant retail bank?
Well, they will become the third largest European bank if they did the deal in terms of on a market cap basis. Obviously, Commerzbank is almost entirely now a retail and commercial bank. It sold all the investment banking operations it had after the financial crisis. So this is very much a case of expanding in terms of that retail commercial space. UniCredit have a big presence in Germany already through Hypervereins Bank. So one of the attractions to the deal for them would be combining that, say, Commerzbank and Hypervereins, and therefore trying to get the cost synergies out of them. But say it's very much on the commercial retail side rather than investment banking.
So, Philip, talk to us about, I mean, just the German banking market right now in general from a competitive landscape. Does there need to be consolidation?
Does say yes. I mean, it's probably the least consolidated market in Europe in terms of, as you said, you've got this huge number of cooperative banks, the Sparkassen, etc. So it is a very difficult and diluted market. But the fact is, Commerzbank itself has got a sub 10% market share. So even if UniCredit did buy it and combine Hypervereins with them, they're still probably just getting over about that 10% mark. So will it change the dial in Germany? Not at all. Because we're only talking in a 30% subsector in terms of the private banks, with 70% or so of the market is in this mutual side.
So you were talking earlier that this has been rumored for 10 years. I remember talking about this at least 6+ years ago. Also, why do you think that now could be actually the moment?
Well, you asked also about what they get in terms of Commerzbank. We heard last night, actually, the CEO of Commerzbank said he will not renew his tenure, which expires at the end of next year. So, that does open a hole at the top of the bank, which obviously be an attraction for them. So that's one potential way of doing it. Who would have bought Commerzbank given the excessive risks they had, say, 3-4 years ago, where we had, say, commercial real estate risks. We had the bank trading at 0.3 times book value. We had earnings are very, very low. So in a way, the risk has gone away a lot of Commerzbank because simply because the earnings are much stronger now because of those rate rises. Also, the German state, German government took a big stake in the bank. So as they sell that further and further down, that's part of the way UniCredit built their stake today. That obviously becomes more and more attractive because it comes more into the private sector. So there are a number of small reasons why it could happen, but does it mean anything will happen? Then no.
Is this going to ignite maybe a little bit more discussion about more cross M&A trades, just broadly defined across Europe?
Without any doubt, it will trigger more M&A speculation today. And I think the fact that you said that they build a 10% stake and yet the shares then rally 20% shows that the market doesn't think this is the end of the story. And there's going to be more of a deal and a potential bid for Commerce Bank is possible. That said, why has there been no big M&A across the sector now for 15 years? And because a number of the regulatory hurdles remain. There's not a single rule book across Europe. Government interference, people don't want to leave their biggest banks and be taken over by a foreign institution, etc. All these hurdles, and nothing's actually changed on that front. That's all still the same today. So, no big deals have happened. Could this be the first? Yes, but it's by no means certain it will.
30 seconds. If the deal does happen, would the bank be able to lend more and do stuff?
I think I would have said yes 3 years ago, just because of the weaker financial position that Commerce Bank was in. I think because of the rate hikes now, is in a much stronger position. It's got a surplus capital position itself. So there's no real barriers in terms of the supply side, their potential to lend more. What's restraining them from growing is actually more the weaker German economy, and we're hearing more about that over the press in the last few days. And that's what's been holding them back. And frankly, nothing changes with this Union Credit deal there. Those hurdles still remain. So no, I don't think this will really help in terms of the lending or the growth potential. It's much more, I think, about the synergies in terms of the cost takeout potential.
So maybe that, the framing of the deal could have changed versus 6 years ago. All right, thanks a lot. Philip Richards, Bloomberg Intelligence Senior Analyst for European Banks, on that 9% stake that UniCredit now has in Commerce Bank. Okay, so we got through the two catalysts. This was it, the debate, CPI, and now do we just dot it till next Wednesday at 2 o'clock?
I guess. Well, that's fine with me.
I mean, we'll be here tomorrow.
We'll be here.
Coming up, you are going to be listening to Balance of Power with Joe Matthew. Maybe he had some sleep, maybe not. Taking a look at the market, the S&P is off by 0.8%. The Dow's off by over 1%. The Nasdaq outperforming, just down by about 0.2%. This is Bloomberg. Happy Wednesday.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. We are looking at a down day. Stocks are off session lows, but the Dow, the S&P, NASDAQ very much in the red right now. We've got the S&P down 43, 54, 51. That is a drop right now of about 0.8%. The Dow in the red as well. Again, off session lows have been down roughly 600 at the low of the day, but looking at a V-shaped recovery here for the Dow. Now down 483, drop there of 1.2%. We've got NASDAQ lower by 36. For the NASDAQ Composite Index, a drop right now of just about 0.2%. Your 10-year, 3.64%, with the 2-year that's now yielding 3.62%. And we have got spot gold down $1.80 the ounce to 25.14, drop right now of 0.1%. And West Texas Intermediate crude advancing 2.4%, 67.32 for a barrel of WTI. Well, with the debate behind us, there are ongoing questions this Wednesday about the potential effect of the November election on markets. Scott Cronert is head of U.S. Equity Strategy Research at Citigroup Global Markets.
Because of the, let's say, the lack of conviction on whether you have a sweep for either candidate and the likelihood of sort of a split Congress, I think what that's doing is keeping many investors at bay in terms of how you actually try to discount election influences.
And you can hear more of the conversation with Scott Cronert on the Surveillance podcast. You can download it wherever you get your podcasts. Shares in solar firms climbed while prison and cryptocurrency-linked companies slumped following the first presidential debate between Democratic nominee Kamala Harris and Republican rival Donald Trump. Among some of those solar names today, we're looking at shares of Solar Edge Technologies up 6.5%. Shares of Sunrun, they're up 7.7%. And Sonova Energy up by 5.4%. Prison stocks lower. Geo Group down now by 7.3%, and CoreCivic lower now by 5.3%. Balance of Power continues now. Back we go to Washington, and we say hello once again. Here's your host, Joe Matthew.
All right, Charlie Pellet, thank you. Welcome to the day after, the Wednesday edition of Balance of Power. It's got to be a special day when I have Charlie Pellet, the voice of the New York subway, to introduce me here all the way from New York. Charlie, thank you. The markets don't like this CPI day. That's clear. We're going to talk to Molly Smith about that in just a moment because we're distilling a lot. We had a late night. We're all peeking out of one eye here. Maybe you are too, because I have a sense a lot of people watched that debate to the end last evening. This, of course, the fastest show in politics, and we're going to have much More ahead in a special conversation with Frank Luntz, who will be with us shortly. His take on what happened last night, the lay of the land this morning, and whether we're going to see another debate. There's been a big back and forth on that from last evening into early today with Donald Trump's remarks on Fox and Friends. Rick Davis and Jeannie Shanzano, unrested, I'm sure as well, will be with us with their clutch analysis later on. But a lot of concern here today about our economy, and maybe it's for the best for Kamala Harris that yesterday was not CPI day, as we watch the indexes struggle here under the weight of the data. Core U.S. inflation picks up the headline, damping odds of an outsized Fed cut. We're upset about a lot of things around here. Molly Smith, of course, up early today, Bloomberg economics editor, making that story happen for you on the terminal and online. I'm hearing a lot about housing costs today. Molly, what's got your attention?
Yeah, that was really the big one today, Joe, and it's obviously very fitting that this is such a big part of the campaign trail now, too. Everyone in the economics world has been talking about this long-awaited slowdown in housing costs for, let's call it a good year now, and it really just hasn't happened yet, and we just keep getting surprised and surprised again by these shelter costs, that's how it's defined in the consumer price index that we got today, that are just far more robust than expected. And what was really surprising about the August shelter reading was that it was pretty broad-based regionally. Some of the ones that we've seen earlier in the year have been dismissed more as one-offs because they were a bit more concentrated geographically. But this showed that housing costs were pretty firm across the U.S., especially in the Midwest, where, of course, we know there are a lot of battleground states in that region.
The numbers are hard to deny. Something called owner's equivalent rent. This is the stuff that Molly watches here. The measure was up 0.49% in August, even worse than the 0.36 rise in July, and almost double the increase that we saw in June, when, to Molly's point, everybody thought maybe we were turning the corner on this. So you put that together, Molly, with the price of goods, specifically groceries, and you balance that. I know that these don't end up in the core, right? But you balance that with shelter costs. This is not a young person's economy.
No, it's really challenging. And I think this is obviously very reflective of what people see in their everyday lives and financial situations, and why it's not comforting to hear that inflation is overall on a downward path when the actual things that you're paying for every day are still very expensive. So housing, of course, that being the number one cost that is on a lot of people's minds. And groceries, as you said, not too far behind, especially in some of the categories in August that were up a lot, or, you know, some of these like essentials that all of us get, you know, like milk, eggs, other proteins and meats. So things that are just really difficult to avoid for the average American.
So the Fed view is important here. Are we giving up on 50 basis points? The market seems to be.
Yeah, I don't see that happening next week. I mean, I think it would be tough to communicate if that's the way that they were going, but it seems like 25, as in a 25 basis point interest rate cut next week, is the more likely. But I think the key now shifts to how Powell messages the path going forward, and keeping the optionality for a 50 basis point cut at some point this year, because that is very much what the market expects at some point in November or December.
What's PPI going to tell us?
So PPI, that's the producer price index, that comes out tomorrow. Yeah. It's a measure of wholesale inflation. That looks to be pretty muted, which would be really positive, especially if certain categories that feed through to the Fed's preferred inflation metric. I'm going to hit you with another one here. The personal consumption expenditures. Yeah, it's a lot. Sorry, even I get tripped up on the letters. So that one, that's why the PPI is really important, because some of those categories filter through to the PCE, which is the one the Fed looks at. So if some of those categories come in a bit more tame, that's really the measure that the Fed cares about.
Another game of alphabet soup with our friend Molly Smith. The thing is, we always talk about bad news, but Molly has such a soothing voice that I seem to feel okay about it after the fact.
Oh, I hope so. And to everyone who is commenting on
Yes.
LinkedIn too, maybe they'll be soothed by it.
Oh, yes. Thank you on LinkedIn and Twitter while we're at it. Maybe you can soothe the markets after. Molly Smith, thanks, of course. This is important for us today at Bloomberg, and it does bring us back to the conversation last night. It was in the first, 10 minutes we got to inflation, the issues of the economy. We did hear from both candidates. Let's go to Philadelphia, Kamala Harris and Donald Trump.
My plan is to give a $50,000 tax deduction to start-up small businesses, knowing they are part of the backbone of America's economy. My opponent, on the other hand, his plan is to do what he has done before, which is to provide a tax cut for billionaires and big corporations.
We've had a terrible economy because inflation which is really known as a country buster. It breaks up countries. We have inflation like very few people have ever seen before, probably the worst in our nation's history. This has been a disaster for people, for the middle class.
I don't know if it's a country buster or who calls it that, but it's a problem for Kamala Harris. And as I mentioned, if this had taken place yesterday, CPI that is, that conversation might have gone a bit differently here. This is something that has tested obviously very poorly for Kamala Harris. Look at our own Bloomberg News swing state poll with Morning Consult. This is the issue. Donald Trump beyond any other, except maybe the border. People trust Donald Trump more when it comes to how to handle the economy, when it comes to how to handle interest rates, when it comes to lowering prices. At least that was the narrative going into last night. Did that change at all? I've got a lot of questions for Frank Luntz, and what a great day to spend time with Mr. Luntz, politics, communications consultant, pollster, CEO of FIL. Frank, thanks for being up with us. It was a late night for everybody, and like I said, I want to go around the horn with you here for a minute. It's great to have you on the matter of the economy. As we look at this CPI data this morning, I saw you talking about markets earlier today. Did Kamala Harris convince anyone that she was the one to be best trusted with this issue?
It's a great question. I don't really think so. But she still performed much better than Donald Trump. Let's be completely accurate. She did not provide significant detail. She did not explain step by step what she's going to do starting on Inauguration Day. She's still very, very light with the details. But she answered the questions, and we do get an idea of where her priorities are. In Trump's case, when they asked him about his strongest issue, for some reason, he pivoted to immigration. And when they came back to it, he was talking about some other issue. There's a rule of politics, which is if you're defining the election, you're winning the election. And he absolutely did not do that last night. In fact, he gave away the definitions where he was strongest. So I don't think last night was a good night for America, and I know it was not a good night for Donald Trump.
The headlines this morning are something, if only in their continuity. Frank, Trump takes the bait is everywhere. It doesn't matter, it seems, where you're looking here. The New York Post headline is Cambush. Are they deserved?
Yes, and they're deserved because he should have known better. She's never had a podium like this. She's never had this opportunity. He did it in 2016. He did it in 2020. He's had the experience. Let me differentiate here because I want to be careful. His campaign in 2024 is better than the previous two. The candidate is what's worse. The campaign is running comparative ads. The campaign is focused on what Trump should be focused on to win this election. But the candidate, I don't know what it's like he didn't attend debate prep, or he didn't listen, or he didn't learn. I believe that most high school student body presidents would have out-debated Donald Trump last night, and I don't say that easily. And in the end, food and fuel, housing and healthcare, the sense of insecurity, the policies that matter most to Americans, Donald Trump is the advantage, as you started to say in the introduction. But you wouldn't have known that last night because that's not how he communicated. And in fact, I think it was so bad that it is quite possible that Harris will never agree to stand up next to him again. And then this campaign is over.
I'm going to get your thoughts on the moderators in a moment here, Frank, because I keep hearing 3 versus 1. But when I woke up this morning, the same thing was trending on Twitter than when I went to bed around 2 o'clock in the morning. They're eating the dogs. People talk about, the takeaways, the historic moments from the big campaigns, John Kennedy, whatever it might be. That's apparently the moment we're going to remember from the campaign. They're eating the dogs. Was that the moment that he lost?
That's the moment when people looked at each other and said, what the hell? When we actually had to get a check. We had to look at the transcript because it was so insane. And of course, Trump is not going to back down. Of course, he's not going to admit that he made a mistake, that he's not going to acknowledge that he got this wrong, because he doesn't do it. He was given the opportunity several times last night to acknowledge what every other American acknowledges: humility, decency, that you're not perfect. Well, here's the good news for Trump. He'll continue to complain that he's perfect and other people have got it wrong. And he'll be doing it from Mar-a-Lago, not from the White House. I can't begin to tell you how poor a performance he exhibited for the American people. Now, his conclusion was very strong, but the opening, and for the first hour and almost hour and a half, that people were just scratching their heads wondering, what is up here? Is he actually trying to lose? That no human being could with his experience, could actually be as ineffective, could say things. Calling Viktor Orban one of the great leaders in the world is, I'm literally speechless. And I've never been speechless on Bloomberg, and I've never been speechless in politics. It is so absolutely unfathomable, but that's exactly what he did.
You made a great point about the closing statements. Frank, this thing went into overtime, by the way. If you didn't watch it in real time, they got their second commercial break, and all of a sudden we're going 5 minutes late. Time for closing statements. And Donald Trump said something that I expected he was going to say at the very beginning of the debate. If you have all these good ideas for helping average Americans, why haven't you implemented them in the last 3.5 years that you've been in the White House? Frank, why didn't he do that first?
And because he was just so poorly prepped, or he's just really bad at this. We forget that he's old, that we made fun of Joe Biden for being 81 and Trump is almost 80, and that he's not the same person that he was 8 years ago or 4 years ago. Probably he forgot. Probably his irritability wasn't just Harris getting under his skin, but it's simply, we know older people, probably I've done it, that we get agitated and irritated if things don't go our way. We become more impatient. But you're not supposed to do that when you're running for president. You're not supposed to, you're supposed to have self-control. And we didn't see any of that last night. And I wonder how many people are telling Trump the truth. Because I've seen the tweets he's been sending out. He says it's his best debate ever. If he really believes that, then he actually is in real trouble emotionally, intellectually, and physically.
Well, he does say that this was 3-on-1, and he's not the only one saying that this morning, Frank. Your thoughts on the moderators? Lindsey Graham tweeted after the debate, the moderators might as well be on the DNC payroll. This is ridiculous. This is the worst moderated debate in history. The fact is, they fact-checked Donald Trump 4 times during that debate. First on abortion, when he said that it was legal in some states to kill a baby after it was born. The claims about Haitian immigrants we mentioned eating people's pets. Violent crime, said it's up, as you know, the FBI said it was down. And then the Stop the Steal thing, 2020, whether he actually won the election. Was that a justified effort to fact check him in real time? He's complimenting CNN this morning. Frank, should they have stopped down and fact checked Kamala Harris more than what we saw last night?
Look, perception's reality. And if the perception is that the moderators are biased, then there's something that's not right about what's happening. ABC had every right to hold people accountable. The public has every right to hear the truth, and the politicians have every responsibility to tell the truth. There's no attribute or value more important than the truth in these debates, conversations, and in the debate itself. And they found what Trump is saying to be wanting, to be questionable. Should they have done the same thing to Harris? Absolutely. And it did come across as being one-sided. And maybe that's because of the things that Trump said. I'm actually surprised that no one has asked me, even up to now, why is it that both mics were turned on? Why is it that you could actually hear the crosstalk between the two candidates?
Yeah.
That was part of the rules. And no one's talking about that.
They did reserve the right to do that, and I'm glad they let it happen, at least for a moment, Frank. I wish I had more time with you. I appreciate your insights, as always. Frank Luntz, this day after the debate, FIL, and of course, a familiar voice to our viewers and listeners here on Bloomberg. I'm Joe Matthew in Washington.
It's 12:21 on Wall Street. We do check markets all day long here at Bloomberg. A major reversal for the NASDAQ Composite Index. Now higher, have been down as much as 1.4%, but right now NASDAQ is up 60 points. That is a gain of 0.4%. We've got the S&P still in the red, well off session lows, down 23 points now, a decline of 0.4%. Dow Industrials down 374, have been down roughly 600 at one point. Does remain lower by 0.9% on the Dow. 10-year at 3.66% with a 2-year 3.63%. Spot gold down $2 the ounce to $25.14, down by about 0.1%. And West Texas Intermediate crude oil up 2.1%. WTI 67.11 a barrel. Brent back above 70 at 70.31. The global benchmark up right now by about 1.6%. NVIDIA CEO Jensen Huang, whose products have become the hottest commodity in the tech world, says the scramble for a limited amount of supply has frustrated some customers.
Delivery of our components and our technology and our infrastructure and software is really emotional for people because it directly affects their revenues, it directly affects their competitiveness. And so we probably have more emotional customers today.
Jensen Huang speaking at a Goldman Sachs tech conference in San Francisco. NVIDIA shares, they're up now by 4.2%. Again, NASDAQ up by about 0.3%. After last night's presidential debate, shares of Donald Trump's social media company are tumbling. DJT on the ticker, down now by 12.2%. Trump Media and Technology Group operates Truth Social and counts the presidential candidate as its top shareholder. And for on-demand news, 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. Balance of Power continues now. Back we go to Washington. And once again, here's your host, Joe Matthew.
Charlie Pellet, thank you so much on this 11th of September. We thank you for joining us on the Wednesday edition of Balance of Power here on Bloomberg Radio, on the satellite and on YouTube, where you can always find us. Search Bloomberg Business News Live. As we bring the program to you live from Washington, just hours, it feels like, well, about 12 hours after we left here, after the grand debate last night that we're going to be talking a lot more about. With some words, not a lot of specifics in terms of policy delivered on Ukraine, on Israel, other matters of foreign policy, including the U.S. withdrawal from Afghanistan. But it is Ukraine we want to begin with our colleague from the Pentagon, Tony Capaccio, who's with us today following, of course, yet another important and emotional ceremony at the Pentagon this morning. Ukraine asking the U.S. and the U.K. for that matter, and this has been going on for months, to be able to use Western-made weapons offensively against Russia beyond the cross-border incursion that's already been had. Now, add Ben Cardin's voice to the story. Of course, Senate Foreign Relations Committee Chair. He says the U.S. must act swiftly to ease these restrictions on Ukraine's use of U.S.-provided weapons against Russia, calling for greater flexibility in his statement to target Russian military assets to degrade Moscow's ability to harm the Ukrainian people. It's got a lot in common right now with some Republicans. House Armed Services Committee Chair Mike Rogers, House Foreign Affairs Committee Chair Michael McCaul making the same call. And you wonder if we are getting close to something, as we've seen this movie before. First it's a no, then it's a maybe. Then it ends up being a yes, it seems, eventually, whether we're talking about Abrams tanks or F-16s. Tony, it's great to see you. Thank you for being available on what I know is a busy day for you. Are we about to see evolution in these restrictions?
Yeah, that's my impression. The ATACMS issue is going to fall next.
The ATACMS are these
longer-range missiles that they actually gave these to Ukraine in March. They stealthily gave them to them as part of an arms package. They didn't disclose until weeks later.
Having been asked for months to provide them.
Right. These are the longer range versions. Back in October, they started using the shorter range versions with a lot of effectiveness in Crimea. And the longer range versions they've now been using in Crimea and other parts of Ukraine and in the narrow pocket in the north into Russia that the White House allowed. The debate now is whether to allow them to go longer into Ukraine. And I think that's going to change. Interesting, on below the surface, they have F-16s, but also the White House is reviewing whether to give them the JASSM long-range cruise missile, stealthy cruise missile that is qualified on U.S. aircraft. That can go like 300 or 400 or 500 miles within, and it's very precise. It has GPS coordinates that could destroy Russian bombers that drop these glide bombs at their bases, if in fact the administration allows that. That will be a bigger kahuna, so to speak, than the ATACMS almost.
How about that? We have no indication on where the administration is in this evolution, do we? Or whether Kamala Harris sees this differently than Joe Biden?
No, she's not going to go differently on this subject. I mean, she is the vice president. She doesn't make the policy on this stuff. She advises.
But were she elected, you wonder if she might see it differently.
I'm thinking that it would continue. There'd be continuity there. I don't see any great change. But the JASSM decision will be a big one, almost bigger than the ATACMS issue. But they have ATACMS now, know how to use them. JASSMs, the pilots, F-16s would have to learn how to use them. So there's a learning curve.
Bigger picture with the weapon systems that we've mentioned that we were told were maybe not appropriate or useful or most efficient for Ukraine. I mentioned the Abrams tanks, the F-16s. Have people been proven wrong, or are these toys that are kind of hanging around that aren't being used well?
No, they're being modified. In fact, Kamala Harris in her weapons last night that she talked about in terms of beefing up Ukraine and U.S., she actually mentioned the Abrams in one of her sentences. No, my understanding is the Ukrainians, Ukrainians, have come up with ways to protect Abrams from kamikaze drones in terms of top cover on the tanks and on the Bradleys. So there's been no great stories saying that the Bradleys haven't been effective or Abrams haven't been effective. The issue is maneuver and visibility. Drones take a lot of that away in terms of where the tanks, the ground systems are.
Interesting. To what extent is this argument over government funding going to become a challenge for the Pentagon? I know I'm sneaking up on you on this, but I keep hearing Chair of Armed Services, the Pentagon itself, a 6-month stopgap will impact readiness. What do they say? What do they mean when they say that?
What it means is that certain funding will not be allocated. I'm not sure how operations and maintenance would be effective or pay. What would be effective are new contracts for sure.
Okay.
And the Columbia.
You just wonder how much of that is bluster when you're talking about this in a budget debate.
Yeah, this has been this happens every year, annually. The Pentagon's learned to adjust. GIO the General Government Accountability Office did a pretty good report a couple of years ago, 3-4 years ago, talking about how the Pentagon's learned to work around these restrictions. So it's not as cataclysmic as it once was, but the language of cataclysm continues. I'm skeptical of how impactful it is. I mean, a year would be bad.
Yeah, sure.
A year would be bad, but the troops would get paid. It's new contracts would not be issued, and there would be impacts on current contracts, but it's not new contracts.
Yeah, I just know nobody follows the money quite like you do at the Pentagon. I bet you I thought the same thing that you did when I walked out the front door this morning. Go out to walk the dog, you're going to work or whatever it was, walk out the front door. The weather was exactly today like it was 23 years ago.
You're right, it was.
Crystal blue sky, the crisp fall air. It's been 23 years since 9/11. You were going to work that day, coming up the escalator when everybody was coming down. Now, you can take the metro, people should know, to the Pentagon.
Right.
What do you remember from that?
I remember pretty well.
Did you get in the building?
We didn't get into the building. I was going up the escalators, which no longer exist, by the way.
Yep.
The walls all blocked off. And the people were coming down the other two. It was urgent, but it wasn't panic. And I heard some people say, get out, the building's about to blow. Nobody knew what happened.
It had been struck.
But just so you know, we were on the opposite end of where the plane hit. It was the day of the locust, so to speak. Your phones were crickets. You heard crickets. I had a Motorola StarTech. Nobody had smartphones, by the way.
Right.
We had beepers.
Yes, we did.
For hours and hours, nobody really knew in that area. It was a war zone in other parts of the building. Where I was, people were milling, kind of mindlessly milling and confused. We did watch the wedge fall. I was with Tom Bowman, then with the Baltimore Sun. We were interviewing a guy who was in tattered clothing. So it wasn't panic. There wasn't a lot of knowledge. It wasn't until later in the day that we knew that a plane had hit. But why that wedge just collapsed. It looked like a prize fighter, I told another reporter, with its teeth knocked out, but the boxer was still standing.
Incredible. You then spent many hours, of course, going through news conferences. I'll never forget walking home. I was in the press building at that time and walking home down the center lane of Connecticut Avenue without a car in sight. This is something that we'll never quite forget, that feeling in Washington by the end of the day. But before those quiet moments came, and it was the confusion, the madness, how long was it? Because we don't have photographs of that impact outside for some stray security camera video. How long until you realized what had happened at the Pentagon?
It was later that day. Someone pointed to me an FBI agent who knew what was going on. So I ran up to this FBI agent, and he turned out to be, he worked for WUSA 9. He put his, and he drove away. He says, I'll talk to you later. So he came back to me later, and he gave me a great quote. He actually saw the plane hit. He said, I could see those double A's on the plane as it hit the Pentagon.
Oh my
we
God.
use that quote in one of our stories, but yeah, it was the knowledge was, there was no knowledge of what happened, basically. You thought it was a bomb. I was there till like 2 a.m. Covering a lot of this, and then I covered the Rumsfeld, Henry Shelton press conference. Rumsfeld was very Secretary of Defense that night.
Yes, he was.
And he said the Pentagon will be open for business the next day, and it was.
Really something. You still work there with a lot of people who were in the building that day.
Less and less.
Well, I believe that. Yeah. What does it mean, though? And it's 23 years later on a morning like this, the President of the United States comes by for the memorial.
Well, it gives you a sense that the vulnerability of institutions.
How about that?
And the need for eternal vigilance. I don't want to sound too much like a
No,
massive
that's
hawk here, but the need for vigilance and the resilience of a human spirit to not only take that tragedy and inculcate it, but keep moving on, keep working it. I mean, the building was functional the next day. It was full of smoke, and the National Guard, armed National Guard, but we found out they didn't have bullets in their clips. But flames are still billowing in parts of the building, and clouds of smoke and acrid, ugly smoke. So the human spirit survived that day, and it was a day of resilience that Americans can be proud of.
This is why I wanted you to come on today, because this is the stuff that informs your worldview. I'll never forget, up at Arlington, you could go up there and look down at the Blue Drape for a long time before that was repaired. I was on the other side of the river from you, and I came out of Metro Center. I was underground when the Pentagon was hit, and I came out to the sound of fighter jets, saw the smoke, and you said it perfectly. People thought it was a bomb. They thought, remember, there was a report that the State Department had been bombed that day.
Right.
It was the confusion in that moment that's hard to forget.
And it was an undocumented crime because nobody had cell phones.
Right.
I ended up buying 3 rolls of quarters from the Ritz-Carlton guest shop. I skivvied down.
That's a real reporter.
I skivvied down from a highway. Spider walked down. I borrowed $20 from a flack I knew he was standing by Macy's.
Yeah.
And I had my own 10. I bought 3 rolls of quarters, and we used that throughout the day to make phone calls to my office. And I gave
You were a
quarters out to
reporter's
others.
best friend, is what you were.
I was.
Everybody who was here that day has a story like that. Everyone who was in New York has a story, or Shanksville, of course. And I'm really glad that you could come on to talk to us. You know, we spent a lot of time this week on the U.S. withdrawal from Afghanistan. Wouldn't be talking about it if it weren't for what happened 23 years ago today.
23 years ago set the stage for Iraq, that disaster, and then Afghanistan.
I hope you have a good day. Thank you for sharing part of it with us. Tony Capaccio doing great work, as always, on behalf of Bloomberg at the Pentagon, and nice to have you on this side of the river. I'm Joe Matthew in Washington, D.C. Our signature panel is up next, this day after the debate. Thanks for being with us on Bloomberg Radio, on the satellite, and on YouTube. We'll have a lot more ahead on Bloomberg.
6:40 on Wall Street. We do check markets all day long here at Bloomberg. We're looking at a mixed U.S. stock market right now with the Dow, the S&P. They are both lower. NASDAQ higher, but the S&P 500 did trim its decline amid gains in its most influential group, and that is technology. Right now, the S&P is down by about 0.2%, down 15 points at 5480. NASDAQ ripping higher, up 80 points now, up by about 0.5%. Dow Industrials has pared its loss to 304 points now, down by about 0.7%. 10-year yield 3.65%, with the 2-year that's now yielding 3.63%. Gold up 0.3%, 25.17 the ounce. A little change there. West Texas Intermediate crude oil 67.79 a barrel. WTI up by almost 3%, and Brent crude back above $70 a barrel, closing in on 71 right now, up by about 2.5%. Bottom line, though, stocks lower after a faster than anticipated inflation report this morning fueled bets that the Federal Reserve will be moving gradually with rate cuts. Home mortgage rates have dropped to the lowest in more than a year, and with that story, here's Bloomberg's Vinny Del Giudice.
Last week's rate on a 30-year fixed mortgage fell 14 basis points to 6.29%, the lowest since February 2023. That fueled an increase in loan and refinancing applications. Mortgage rates track U.S. government securities, and the yield on the 10-year Treasury note has been falling in anticipation of Federal Reserve easing. Fed officials meet next week. Vinny Del Giudice, Bloomberg Radio.
After last night's debate, shares of Donald Trump's social media company are tumbling. Trump Media and Technology Group operates Truth Social. It counts the presidential candidate as its top shareholder. DJT on the ticker. It is down now by 13.4%. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. Balance of Power continues. Back we go to Washington, and once again, here he is, Joe Matthew.
All right, Charlie, thank you. Yeah, DJT, look at that. It's just basically $16 stock now after approaching 70. Where'd that top out? $66 a share. Lots changed since then, like the entire race. Thanks for joining us here on Balance of Power. I'm Joe Matthew in Washington, the fastest show in politics. Not slowing down this day after the debate, even as we peek out of one eye. I don't know if you were with us for our special coverage last evening. We went through this all together here with Rick Davis and Jeannie Shanzano, and I'm deeply curious to hear what's on their mind. Having remembered the moment, it was right in the first half hour, maybe the first 20 minutes, when Kamala Harris reached into the bag to pull something out that she knew would upset Donald Trump. Of course, it came down to crowd size last night. Let's listen.
You will see during the course of his rallies, he talks about fictional characters like Hannibal Lecter. He will talk about windmills cause cancer. And what you will also notice is that people start leaving his rallies early out of exhaustion and boredom.
She said people start leaving. People don't go to her rallies. There's no reason to go. And the people that do go, she's bussing them in and paying them to be there.
The whole mood of the debate, the direction of the conversation, the tone and tenor, and the body language all seemed to change at that point. And here we are now today looking at a series of headlines indicating Donald Trump took the bait. How does the panel see it? They're back with us. Jeannie Shanzano and Rick Davis. As I mentioned, Jeannie, of course, a senior democracy fellow with the Center for the Study of Presidency and Congress and political science professor at Iona University. Rick Davis, partner at Stone Court Capital, Republican strategist. Great to see you both. Jeannie, I was the guy questioning whether this was a worthy effort here. Why not simply go out and lay out your policy proposals, tell the American people what you want to do with the country instead of spending all this time prepping on how to needle Donald Trump, get it under his skin, trolling him before, try to draw him out on an open microphone. But was that, in fact, the right strategy?
It was the right strategy. I think this was a win for all of those of us who like to prepare. Kamala Harris was well prepped, well prepared, and she delivered. Donald Trump, on the other hand, he looked something like an incumbent president who's too busy to prepare, doesn't take this all that seriously, goes in there with one job to do, define Kamala Harris as too liberal, too dangerously liberal to be trusted with the keys to the White House. And he simply could not stick to that message. He kept getting distracted. And so from that perspective, she certainly got the better of him, consistently goading him into responding to things that, quite frankly, weren't going to help him, like crowd sizes.
Is it as simple as that, Rick? And did Donald Trump perform any worse last night than he did in the first debate?
I think he did a little bit worse this time. Obviously, he didn't, quote, take the bait in the first debate. He was driving the messaging against Joe Biden, and Joe Biden was taking the bait and trying to respond to his outlandish claims and in many cases non-factual statements. So never answer a lie with a fact. I mean, it just doesn't make sense in a debate. But I think there was a bit of an elegance to the way that Kamala Harris did the debate, and that was not only did she troll Trump, bait him into getting off of substantive issues to talk about things that drive his ego like crowd size, but then she tied that kind of behavior into how authoritarians like Putin and Xi can take advantage of him. And I didn't really notice it that much in real time, but afterwards I really thought through the whole approach to the debate was very comprehensive in that she proved to Trump, to voters, to viewers, that Trump could take the bait, that he would be able to be played like that. And then she said, and others who don't have America's interests in mind play him the same way. And I thought, wow, that's a really interesting construct that they did, because it's a little subtle, but I thought it was very elegant.
Love to hear from you both on the moderators, because we're all hearing, and we were hearing before we left the air last night, 3-on-1 is the take of the Trump campaign. Senator Lindsey Graham tweeted, I mentioned this earlier, the moderators might as well be on the DNC payroll. This is ridiculous. This is the worst moderated debate in history. Jeannie, is he right?
No, I don't think it's the worst in history. I think Candy Crowley probably still owns that mantle. Love Candy Crowley. I think she still owns that one. But, there was points at which you could nitpick and say that they were fact-checking Trump more than they were fact-checking Harris. Harris did make some misstatements. The one that stood out to me had to do with the bloodbath comment. She took it out of context, could have been fact-checked. But that said, her comments were not as egregious as Donald Trump's were. And so that is the result of that. So, yeah, I think you can nitpick on the moderators, but the reality is Donald Trump did himself no favors in this debate. We have long said, and I will stand by this through the election, whoever this election is about is going to lose. That was true when it was Joe Biden as the Democratic nominee. Same thing for Harris and Trump. And last night, Donald Trump made it all about Donald Trump. And that is a problem. This is an egotistical guy. He does not want to make this about Kamala Harris, but that's unfortunately what he needs to do. Define her. Talk about how liberal she is. Talk about issues he wins on, like the economy, like security, like immigration, like inflation. He tried, but he just couldn't get out of his own way. So, I don't think you can blame the moderators for that as much, again, as you can nitpick on little things. I think both the moderators handled it as well as can be expected in a live broadcast. That's awfully difficult to do.
Rick, they did fact check Donald Trump 4 times on abortion, the idea of a post-birth abortion, claims about Haitian immigrants eating dogs and people's pets, violent crime going up when it was down in the 2020 election, whether it was stolen. Should they have fact-checked Kamala Harris more? Should they have fact-checked Donald Trump less? One thing I did notice is that the moderators let Donald Trump bend the rules a lot more. He managed to roll over them more than Kamala Harris, who was held to time. What's your thought?
Yeah, I mean, overall, I thought that the moderators did a great job. Donald Trump's maybe the hardest presidential contestant in a debate ever to manage. And by and large, most of the moderators that have had to moderate Donald Trump presidential debates have failed miserably. And I would point, to my good friend Jake Tapper and the CNN debate just a couple months ago. That was a disaster. And they had a gloves off policy. They let him say whatever he wanted to say. And it went unchecked. I think the 4 things you mentioned, I think our friend Lindsey Graham would actually never say those things because he knows them to be untrue. And so I'm not sure what part of that he would disagree with. On the other hand, and you make a good point, there were some things that the moderators could have fact-checked Kamala Harris on. But then again, the Harris campaign has a right to be complaining about the fact that she was cut off repeatedly, and Donald Trump, I don't think, was ever cut off. They let him go on and on. He added responses to everything that Kamala Harris said, even though it wasn't in the rules to do that. And so, look, I mean, these things are an art. They're not a science. The rules are set up to manage guardrails, not to dictate every activity in a debate. And for a network to do this, which is hard to do, and for the contestants to be willing to go in without an audience, with microphones turned off, and all the rules that were, I thought it was a very well-run debate. We should aspire to have these kinds of debates all the time, where if you lie, you get called out, and you have plenty of time to make your case. And that is the case. Even the fact that they extended the time of the debate, outrageous, right? I mean, like, nobody ever does that. Oh, let's give them another 10 minutes.
Right.
At that hour, I was ready for bed, but I thought it was actually a really great decision. People could take a lot from that, and I thought I thought it exceeded my expectations when it comes to creating a forum for both the candidates to be able to make their case.
There's a phrase we hear in the newsroom sometimes or in the studio: blow the brake. Because sometimes you have to go into overtime. Rick Davis and Jeannie Shanzano, thank you. They were with us for the big dance last night. They'll be back with hour 2 here on Balance of Power, as we will welcome our global TV audience to the conversation. The big question a lot of us have, there going to be another one? Kind of felt like it last night, that Donald Trump might want to come back around and maybe take another swing at this here. The Harris campaign was welcoming it within minutes. Let's do that again, said Brian Fallon on Twitter, within moments of the debate ending. But this kind of took on a new wrinkle this morning. Fox and Friends, Donald Trump qualifying this idea. Fox has now floated a couple of dates to potentially do a second round in October, but it's very difficult to tell where we stand on that, and that's why we want to bring in Tyler Kendall. God bless Tyler, is still in Philadelphia, having been there for the duration yesterday, reporting for Bloomberg and producing our great coverage last night. Tyler, it is great to see you. What are you hearing on the ground this morning in Philadelphia?
Yeah, hey, Joe. So new this morning, former President Trump casting doubt on whether or not there will be a second debate, saying that he's not inclined to do one after, as you mentioned, the Harris campaign challenged him to one after last night's quickly concluded. We started to hear this messaging from Republicans pretty quickly after the debate last night in the spin room, including from former President Trump himself, who made a surprise visit to us reporters in the spin room, holding this impromptu press conference where he repeatedly said that if Harris has to do a second debate, that must mean that she has more explaining to do on her policies, but that he doesn't necessarily feel like he needs to do that. I heard pretty similar messaging from most Republican surrogates in the room last night. That includes Senator Marco Rubio, a Republican from Florida, of course, a former presidential candidate himself, someone we know was on the vice presidential shortlist for Trump's campaign. I asked him if Trump should engage and have a second debate. Take a listen to what he told me.
Maybe. I mean, I think he would do fine in a second debate. I think it's interesting she wants one. Usually, look, if you're winning, I've done debates. If you're winning a campaign, you don't want any more debates. Like, you're winning. Why do you want to expose yourself to something going wrong on the stage?
Now, Democrats, for their part, were incredibly eager to try to hold this second debate, all of the surrogates coming out. But what really struck me was just the sheer number of Democratic surrogates that came out and how quickly they started to fill the spin room floor. It stood in stark contrast to, I was at the Atlanta debate, and we literally had to wait and hardly saw any Democratic surrogates come out after President Joe Biden's performance on the debate stage then. But Joe, I will quickly mention that one person who loomed pretty large but was not in the spin room was Taylor Swift and her endorsement of Vice President Kamala Harris shortly after the debate ended. That was pretty much a huge talker in the spin room last night as Democrats cheered the endorsement. But for his part, former President Donald Trump was asked about it this morning, and he said that he's not a fan.
Not a fan? I thought he was working on that endorsement. Tyler, thank God Tyler came on to mention. I haven't even mentioned Taylor Swift this hour. I am remiss. Thank you, Tyler. Travel safe to get home. Tyler Kendall in Philadelphia this day after the debate. Was that something? Were you with us last night? This dropped within a minute of the program ending. Here's Kaylee Lyons reading it on her phone. You're not going to believe what I'm looking at on Instagram. Is that going to matter? We'll ask the panel about it. Rick and Jeannie will be back in hour 2 of Balance of Power. As you would expect, we'll spend time with Anna Wong at Bloomberg Economics on this CPI day. Of course, always with our eyes on the markets. Not going over terribly well. The S&P 500 still lower. This is Bloomberg.